All right, let's give it a shot today for a bit. Okay. Um. We'll see. I think that's going to be a big part of the moves here. I need to see what's going to happen with this trade talk. Nothing really happening right now. I wouldn't suggest much. I did push higher. It's trying to find a support here. Good morning. Kind of in a pickle spot right now. We got a lot of potential, but it's like I said last week. I think there's plenty of room here to retrace at different times. So getting a really weak kind of run-ups. I mean, none of this is particularly strong. Volume's not really there. So we really need to see it base out and find that support. And I don't know, the S&P 500 came up again, but that was, again, something that happened last week. And we're still, in reality, we're still just kind of chopping right here. So maybe we're waiting for good news. I don't know about the China deal. That's definitely the biggest trading partner that we have to contend with. But I feel like at this point, I think there's some interesting, I don't know, tidbits that we could go into. But I don't really want to kind of regurgitate what we did last week either. So I don't want to get too in the weeds about it. The main thing here is that if this is a wave 4 and it's just not very long, which is kind of surprising, and it's already made an advancement, so it's like I really can't see this going like extremely beyond the top at like 610, for example, on SPY. Like 6,000 on the S&P 500. So I'm feeling like, again, even if this makes an advancement, it seems like we're in this sort of a mode right here, and we're probably still going to have some kind of like a widening before anything else. I would be surprised if it just kept going, but it is what it is. Did I see that there was a California Senate hearing about MPW last week? No, I did not. I don't watch a lot of the news or keep up with all the news on all the tickers all the time. Every now and then it pops up on my feed and I'll read it. I'm not overly concerned unless it's particularly positive or negative news, and usually you can see that in the price action anyways. So you kind of find it on you kind of find it on its own terms, I suppose. Right now, I really haven't looked at MPW that much, to be honest, since it made this jump. Right now, my biggest concern, I suppose, there's this, I guess you could call it like a cross. I think it came from yeah, that's what I was thinking. I think it came from like near the top cat ears. This is a bit speculative kind of, but basically like when you have the middle of the cat ear, which is a kind of a double peak, right? You have a UT, then a big UTAD. So you have an up thrust that pushed above the top. I don't really see anything particularly problematic except for this little sign of weakness right here on this drop. This is way long time ago. It's 2013. It really is like right where we are right now, which kind of makes sense. because ultimately, like, this has to now be proven to be bullish again. And so it's struggling as a ticker might to get back over that marker. So you can see all three of these push-ups long term seem to be all right. Hey, we had this downward resistance that was developed early on. This was in the housing crisis, 2007 all the way through 2011. And essentially ever since it broke out of that, it's been in a distribution. Now, it's a long-term distribution, and at first it doesn't necessarily look like it's going to be distribution because it made a higher low. This is why you have to kind of like pay attention to the little details, because after this initial push up, it does have a backup, but then it doesn't just continue. It then comes down lower again. Like, there was an abundance of sellers and there's chinks in the market. And this is that 2015 market drop, which at a glance, like, I can't really say all the little details about it, but it is a pretty universal drop. Like, it happened in the S&P 500, that 2015 to 2016 area. So like, there's certainly a lot going on in the market on the whole here, but this clearly indicates like some kind of a desire to maybe come back down and retest lows. It could be, again, that this was not necessarily in the cards to come as low as it did, but at least come back down probably to $8 range, which makes sense. It's about the middle for all of this. So I don't have any real question about that in my mind. It is what it is. Like, clearly, like, this was directional input from bears. Beyond that, you know, what you have essentially is this massive UTAD, and then you have the drop down, and it goes back to where it was in the 2008 big financial drop, right? Which is significant. I mean, it's not insignificant. It's a big deal. So that it's back down that low is very, very significant. So this is one of those tickers that, for me, it's like, well, it's been divergent since 2022. And if you look at where that is, this is not a mild divergence. This is divergent all the way back to where we're on the weekly chart here. This is divergent all the way back to $20. And that's where the widening began. So this is very significant if it can find its footing, because it will have a pretty massive return. You're talking about $4.50 all the way back up to $20. You know, it's easy to kind of get stuck in the meme stock world or the penny stock world, but that's a really significant move over time. So you're talking about a potential like near 400% move. But that being said, we're in a really problematic zone right now. So any kind of positive or negative news is probably going to send it pretty much whirling around these levels, because you're going to have bears kind of trying to drive it back down through the prices that you're seeing over here as a result of these long-term downtrends to try to keep the trends. There's more than one. There's probably a few, but everything's kind of intersecting. I've got at least two. This is probably another one right here. That's higher up. That hasn't happened yet. It may even represent, it probably does represent this guy right there. And those are the last three hits. So there's just a lot going on right here. So like long term, I don't see this as a big question mark in my head. I'm kind of just looking at it like, well, eventually if it gets above here, it's going to probably fly. And I've been saying it for a little while now that the next move should be an SOS if it doesn't go down into a spring, because I think that this could be potentially like the bottom, right? But if it does go to a spring, it's going to be pretty ugly, you know, because it would have to come all the way back down, and I can't imagine it would stop here. It would have to come probably all the way back through to the bottom. And yes, this does leave it open to like this kind of almost reverse scenario of being really low by 2026 instead of being really high. It's essentially like a backwards, completely backwards. I don't find that, again, to be unusual. I think this is pretty normal. Usually when we find these intersections, they're almost always pinpointing. So like the same thing would apply to AMC and GME, for example, since we like to talk about those more than the rest, that they tend to have these targets in mind, but then you can almost always find the alternative. I believe it's not as complex as it seems, because it sounds like it might be a little bit complex. Like, why would there be like this complete flip, right? But if you think about it in layman's terms, if you're consolidating on a price and you're building a cause and there's going to be an effect, then it would make sense that the effect would be kind of equidistant either way, right? If the effect is based on how much chop that you have and how much you're trading across this area, then naturally, if your effect could push you up, $6, it could probably push you down, or at least percentage-wise. I wouldn't even say dollar-wise, but percentage-wise, maybe it could push you up 50%. It could probably push you down 50%, and that makes sense to me. It was like when we had that Judge Zern decision on AMC, the upside potential there was quite high, but then the downside potential was essentially equivalent. I mean, it was basically 1-to-1. So, and you could see that in the chart. And then I think about waveforms, and I'm like, yeah, it would make sense to me that if you've got a waveform, and this was just already on the chart, so I'm going to use it. But if you've got a waveform, it would make sense to me that there would be kind of an inverted model of this, at any given time, because essentially you're just talking about a range. Now, this range might not be, let's just say this range might not be perfectly horizontal. Could be at a diagonal or something, right? But naturally speaking, like if you failed to come up here and advance, right? Like where are you going to go? It's not complicated, right? If this has a failure and it becomes distributive, like the first step is going to be to come back down to that floor again. And that's what you have to do. And sometimes that happens along a bottom. Like this might try an early advancement and fail, and that could end up being like a spring, which is what we saw in AMC in 2020 into 2021, where you basically like fail, but you come back down and then it ends up rocketing, right? And it was like a moonshot after that. Sure. But I mean, like, waveforms are not by themselves. Like they're part of trading like a top and bottom in the market. So when I'm looking at with MPW specifically is like, I think it makes sense to me then that there's a potential spring target here and that the timing happens to be about the same doesn't really irk me. It just sort of makes sense. Could that mean that, yeah, it goes into some kind of a distribution again here? Like this ends up being like a 4 top and it drops down. Yeah, I mean, it could totally happen. I don't like the idea of saying it has to be like this. I think this is one of the stronger ideas, but I think that there's also potential here. We could chop sideways and then come up into a 4 top and then come back down. And this would be like a 1, 2, 3, 4, which is more distributive like. And again, depending on how it travels here, it doesn't have to be distribution long term. It could still be an accumulative bottom into a spring. But this certainly would look very, very different, right, than what we've suggested so far. Another thing that you want to pay attention to is exit trajectory, because the intro trajectory here is very, very fast. Like in this case, it goes down extremely quickly from the presumed top, which in my opinion is like this 1050 anchor, right, where it's like consolidating and then it drops. This is a very quick drop, and then it's not recovered, right? It has never come back above the bottom of that range, right, from basically around 750 down to 290. It's that whole area, right? It hasn't even breached 650, so there's this kind of gap zone in the middle of $1 or between the two ranges. But like this motion itself is very, very fast. Typically, though it's not always perfect, typically it does follow that exit trajectory, and you find later that it's roughly the same. And so when I look at a waveform, I'm like, okay, what does that mean in terms of timing? Well, on the one hand, you've got this kind of big picture downward trajectory, and you might say, well, that's different, right? Because you've got this guy on the bottom and this guy on the top, and those are the widening trajectories. So you could just split the difference and say, well, I think it's actually on average, maybe it's between them. It's like right in the middle. So your trajectory is not actually the steepest trend, but it's 52 degrees, right, in this case, versus 79 degrees. Well, then you have the bottoms, and you have to decide, well, how do you measure from the bottom? So there's, again, it's like the more you kind of look into it, the more you might say, like, well, this is a bit confusing. I don't know which one to pick. But I don't think it's again, I don't think it's that complex, because usually what we find is that the exit trajectory is about the same as the intro. And then typically, like, and I think I already have it on the chart here, this is like the 52 degree trajectory. I think I've already messed with this a couple times. It looks like the right one. Is that they have already developed that trajectory out. So here's the 52 degree one. You can see it's already where my markers are, and that's from the first bottom. So then the steepest trajectory could be from there, which is probably like close to this guy, but I think it's actually a lot steeper than that. So let me go ahead and do it again. That's pretty close. That's eyeballing it. It's 79 degrees. I'm not going to make it exact. But this gives me a different picture, because this would tell me that, all right, let's say, for example, that you think this is like a 2-year cycle or something, or a 3-year cycle. So this is July 2023. Well, if it was a 2-year cycle, then 2025 July would be where it should be hitting like that top, right? Which is extremely soon. That's like, oh, it should be up there now. Well, that doesn't seem super likely. It's not impossible, but it doesn't seem super likely. But you can easily test this by just going and looking at the exit trajectory and saying, well, is there an exit trajectory that kind of matches that from where we are? And I know this is a little speculative. I get that. But another thing we could do is kind of look at, well, where's the middle here? Because if we're thinking about extremes, we could look at the beginning, the end, or the middle on this range. We could look at February 2023. Now, that might make more sense, because if we're thinking, again, that it's a 3-year cycle as opposed to a 2-year, well, then we're talking about February 2026. It's a really common thing that's come up, hasn't it? Right? And that's one of the things that led to me thinking that, because there was a consistency there. This middle peak ends up being essentially like right in the middle. Not exactly, but about right in the middle, which is really close. All right, well, that changes things, doesn't it? Because now the steepest trajectory we have is like 76 degrees, right? And we're thinking like, well, maybe that's where that is, right? This is a way for me anyways to help myself visualize like potential possibilities. So this is one that's already kind of on the charts. We talked about it previously of like coming down in different spots, but it looks like September. And that's starting to become a very common theme, isn't it? Like we're seeing that September 6th area, and this is literally right there in that same region. It's very odd that's happening all across the board, right? Almost that the early September, which is late August. I think there was some news about the summer months because, and I think we're finding that the summer months are becoming more relevant because the Fed is not likely going to budge during the summer. And that's what the news has been lately, that the Fed isn't going to start rate cuts till after the summer, which would make sense then. That's why August and September are coming up. So it has nothing to do with the fact that, yeah, AMC and some others have some earnings around there, although they do. It probably has more to do with the fact that the rate cuts aren't going to be here until after the summer. So that seems very likely. So we're kind of pricing in like a stagnant market potentially until that time, if that happens. So one of my ideas on MPW is that it's already in a SOS at that time. So this is the same region. And that would make sense, again, because you're already kind of halfway there, but you're basically still stagnant. You haven't left yet. You haven't left the range. The other is that we're pretty low. I mean, so you can see like why this would be reasonable either way. In one case, it's SOSing, you're going to the moon, yada, yada, yada. You already feel like it's going. In the other case, it's going down to a spring. This sounds very familiar to me because this is extremely similar to what we saw in the AMC bottom, which goes back to 2020. It's essentially the same model. And I know it sounds weird, but I actually think we may be playing almost a carbon copy of that to some degree, albeit it's like offset by a few months. But remember here, this was September. I'm not saying it's going to do this into September. I'm just saying, remember here, it could. I guess it could in theory. But I don't think it is. I don't think it's the same that way. But remember in September, this is where we talked about how GME was like taking off. Well, I said that, but I've also said it different times because it's true, and it's just go look at the charts, right? This is largely like where we see the market on the whole go into, we would call like a markup phase. And I think that the market on the whole goes into the markup phase because they're going into the SOS and they're like leaving at this time. But why did AMC go down into a spring phase? Again, I think it's the same kind of argument of where did you have an advancement and do you need more liquidity? And it's really this question right here. It's not that complex, right? It's the question of like, have you already made the appropriate liquidity dives? Have you already traded this range enough? In AMC's case in 2020, the answer is obviously no. But you know, people don't think that liquidity matters. They don't think supply and demand matters, so they assume that it's all rigged. So why would it matter? You know, that can't matter. It doesn't matter. Basically, what they would say is that had nothing to do with the downward motion. And I'd say, like, you know, probably, gosh, you know, like that's ridiculous. Because if you look very carefully, you can see extremely clearly they spent very little time, all of like a month in a bottom here. The rest of the time was spent all up top, you know, all up top. And if you look at the amount of time traded on the top, it's significantly longer and eclipses by a large margin the bottom, which is great for accumulation purposes. You want that. You want to see that higher push with the really strong rebounds. But it's important to note that because then, like, that's reason for coming back down. Like, you did not trade enough down here. And it was part of the reason why when we pushed up, and I got a lot of pushback on this, guys. It wasn't just one person. It was like every other week I would say something like that, and someone would come in and say that doesn't matter. It's all whatever. We're not coming back below 3 or 350. We're not coming back below 4. But it's like, look at the range and tell me, did they find buyers down here? If the answer is yeah, that they found liquidity down here, then it's almost a guarantee that at some point they're probably going to try to come back. It may not be now, but it'd be later on. And that's exactly what we see here is like, this has been largely the most traded region. I don't think personally, when you come back up here, and I've said it before, and I'll say it again, I don't think when you come back up here, you're going to spend a lot of time going back from 4, especially after this business, spending a lot of time going back from 4 up to about 560. It's just not going to happen. You're probably going to pass right through it. What we've been suggesting is that this is being used as a distribution front right now. Anything basically from, I would suggest like 390 up to 450 should be a distribution point, not a buy-in point. And until that changes, there's no reason at all that anyone should be calling, unless they think that there's been some kind of a liquidity like completion, which would be like a spring, for example, or an LPS. Unless they're contending that that's what this is, then there's absolutely no reason to be saying that it should go beyond that point just yet. So this is really setting up extremely similar from a liquidity standpoint. And yeah, to some degree from a fractal or an iterative standpoint, if you want to use those terms, it's similar. But like, and I've talked about why it's similar, but like, I don't put these things out there like it's some kind of it's like the way it always happens. Well, yeah, because this is an accumulation, this is a distribution. That's what forms the sine wave, right? Forms the moving across of a range. It's not happening though just because, you know, like these are levels on a chart. And I think that's kind of understood by the majority of people, especially if you're here, because you know that we do TA and that's what it's about. There's a lot of people who still look at this stuff and just kind of scoff at it and say, well, that's not really happening because the market's rigged and Yeah, it's manipulated because there's large operators who have more money who can push it around. But the idea of like trading a range and then like once that range is done and you no longer can trade there, you're going to move on. That's like just basic 101 market everything. Like as long as there's people willing to trade between $2 and $5, they're going to trade there. Like the only reason you would leave prematurely is probably because, again, you're either doing something on a bigger scale and you're going to come back later. So there's like a huge range, which is totally reasonable. That's like saying, that's like looking at this and saying, well, we've actually got two micro ranges here, right? Top and bottom. Well, yeah, of course you do, right? So naturally, like, you may not stay here forever if this is part of a larger wave. That's the whole point of when I talk about iterative motion, we're talking about waves within waves, right? Which sounds confusing at first, but then you just think about it. It's common sense. It's like, well, you know, you may not have the liquidity you need now to trade any lower. For example, in this particular example, I'm looking at this bottom right here. So right now you may not have the liquidity that you need to drive the price lower, but there may be a market demand for that or an operator demand for that they want to go down lower. They may at some point say, all right, we're done here for now. But if we go up and load up on seller positions, we probably will have enough to get through. And those are the things that I can't answer, right? Like those are the questions that I can't answer. But if you understand that, meaning like you just wouldn't have the answer. You'd have to interpret it. But if you understand that, then it's not really that complex. Like, I feel like the market's actually pretty straightforward. Because then when you come back down, it's like, oh, well, if I hold here and then make an advancement, that's a higher low, right? Well, guess what? Bulls stopped it from advancing and the market's turned around. Now I've got a confirmation buy and it's going to mark up. And then you can trade the markup. The markup's not from where this bounce is, although a lot of people want to trade that. It could be, just depending on how you look at it, but you'd have to be really careful. This is where we get kind of messed up, right? Because this is where you hit those places where it's like, oh, it could be a shallow S-curve. Maybe it won't go down again. And it does a little spring early, and then it reacts, goes up higher. This is literally what we're talking about right now. But it could also be that this is just a secondhand distribution and it's an S-curve, right? And you're going to do a big full S-curve down. It's very simple. So everything I'm doing is always looking backwards. And I think that you guys know this. I'm just kind of repeating the same thing. But what I'm noticing is that this is setting up a lot. The reason I'm saying it right now is I said it, I think a week or two ago, and I've sort of kept coming back to the same point. It looks like August into September, probably again because of the rates. I actually think interest rates are still a big topic right now because they decided not to do anything about them. The tariff stuff is the tariff stuff. We know that those deadlines are going to move the stock. Unfortunately, what the tariffs have largely meant to the Fed, and it's probably true, and most economists agree, is that you can't combat, like the Fed has said, you can't combat inflation. You can't deal with inflation and growth at the same time. They kind of work in opposition at times, and that's a difficult thing to deal with when you have a brand new administration who's just radically changing trade policy. It doesn't matter what you believe about that, if you think it's right or wrong. It's impossible to look at that and say it's not a radical transformation. The tariffs that were introduced of like 140% or something, crazy for some nations are just absolutely huge. Huge, huge, huge. And that means that you're going to have like a radical reshaping of the world economy all of a sudden. Well, you can blame the Fed if you want to blame the Fed and say that they're playing favorites. I personally don't. I think they're being pretty reasonable by just basically doing nothing. Like they could be going the other way. And waiting for the numbers to kind of work themselves out. But, whatever. Point is that that's what they're doing. So this conversation has now led to stagflation. Like basically we're not moving. Our growth is really low. We may have like a negative GDP growth at some point, which could bring about recession. At least be described as a recession if that happens. And it doesn't, it doesn't matter whose fault it is. We already know that their people will point fingers and so on and so forth. But the purpose of illustrating all that is just to say, like, I don't think right now the market believes that the Fed's going to do anything until perhaps after summer. And I'm starting to find that more and more and more, there's a pretty concise pinpointing of August, like late August into September. Oddly, and I don't know exactly why, this is where things can get maybe a little conspiratorial, perhaps. But oddly, yeah, is weird to me, of course, that this was in August and September when we broke down, and that actually constituted a 2-year cycle, which is very similar to what happened in 2020 with a 2-year cycle. How would you know? I don't know. And frankly, it's kind of a waste of energy and time for me to like find out. It's not for me to find out. Maybe somebody out there wants to find out. I don't know. I don't know how you could, but you could try, I guess. How could they have known that 2 years away? Like, I don't know. Maybe they didn't know, maybe their calculations didn't really contribute for that, but now there's news lining up for it. And so they're going to utilize whatever news there is. Because like, if you think about it, this is like a vine on a trellis. The trellis is something that holds up the vine. Like, you could have a fence and your vine could climb the fence, right? And if you know where the trellis is, then can't you just manipulate the news whenever you need to kind of just accomplish your goals? It's almost like this could have been anywhere now, and down would still be down and up would still be up. So part of me is like, I just kind of think it's sort of pointless. Like, yeah, at the end of the day, I think if you wanted to come down and trade this 2 years, it really wouldn't have mattered what the news was. You could have accomplished it. Like, it could have been great news. It could have been bad news. Some of you guys are like, no, that's not how it works. All right. I just think that if you're going to talk about manipulation, that's probably where the conversation leads me. It's kind of like, it's not really about necessarily perfect predestination, but just what's the operator's plan to begin with to trade the bottom. Okay. You could do that a number of different ways. We've seen a lot of different bottoms, right? And visually they look kind of different, right? But they're all essentially accomplishing the same purpose, which is liquidity grabs. So when I look at MPW, I suppose my biggest concern right now is that once again, it's having trouble. This is the longest it's kind of traded in this region. You can see between the white and the yellow, and those are the longer term, perhaps you would say downtrends, or maybe cross creeks, if you want to call them that. So these are providing resistance. They're not providing support yet, and we haven't yet made that support yet. So what I contended was that what may be occurring right now is that this is a liquidity dive, and it is. So because it's back beneath the support, but I had already figured that was probably going to happen because, and that's why when I traded this, I said I'm going to trade it up to like 5 at most, 550 or something like that. It ended up going way further, which is fine. But I'm like, I was going to trade from the bottom here at 390 up to about this $5 to 550 area. And if it got there, I was going to wait and see what happened because I knew that there may be a pullback, even if it's an LPS, and that's probably where you're going to do it because you're going to hit resistance there. Well, it trades higher, but notice that it made this like lower push almost immediately, right? And it does. It pushes beneath the previous bottom where it took off from at like 475. This pushed down to like 470. Again, you don't ignore those liquidity moves because they're important. Somebody's trying to get it down into this liquidity shelf. Okay, well, does that mean now we're destined to go back and fill a gap at like $4? Like maybe there's still room here to come down above these trends. Like it's possible. But what I'm contending is like I'm not really sure yet because I don't know if it's going to hold up or not. If this was a weakness, right, and it can't hold a support and it didn't make a higher high, so at this point it hasn't yet confirmed an uptrend. It looks like something that's in between worlds, right? It's like it made that lower push. You're looking at that like, it could have been a spring. And now it just needs to make that rebound. Well, guess what? All paths lead to the same place. They do. You know, you've got this area right here at 450, and then you've got the next shelf at $4, and that's kind of it. Beyond that, there's no reason why you shouldn't expect it to come down to like 315s again. So after that point in time, it's like there's nothing really else here. I'm not saying 350. I'm not saying, 330. I'm saying probably going to come down all the way if it does. And that turns this into a big old fat S curve down, right? You're probably going to be back down here at 315 pretty quick. It's just a question of liquidity. So I don't know what I don't know. I don't know if this is the liquidity dive. I can look at volume and kind of try to predict it. It would make sense to me if this springs back up though and holds support, which is what I've got right here. It would make sense then that would indeed go to the upside, because if it managed to hold, and that's what I've got in this kind of yellow marker, that it would bounce up and over. I should have done this both in yellow, but I know there's a lot of lines here. But if this pushes up and goes above the trend here and holds above like 470, yeah, I think it's made the rebound, but it's also like trying to regain this support. It creates a widening here that then breaks out to the upside, and the rest is history, right? You're going to head back to the top and probably, not for sure, but probably you're going to be okay. There's another problem, of course, that this takes a little too long and it shows additional signs of weakness right here, in which case, yeah, it may very well go up in a widening to retrace back to that top, but it may not break out. That's a longer term trade, right? Where we're not sure what happens after that, but it could be potentially bad, at least for the short term of it, not necessarily long term. So I've said it repeatedly. I'll say it again. I don't like MPW as an options play anymore. I think it's a good long-term, if you really wanted to play options, long-term options play. We're talking about like mid-2026. I would even say not this March area, but like June. And main reason for that is just I'm not really sure what happens here. So if this is indeed like a spring, it could easily jump above 470 and move all the way into an SOS by August, if this was that. If it's not a spring, it's a weakness, which means that this is probably just going to do a secondary distribution. So it'll have little tiny signs of weakness in here locally. It won't be a strong bottom, and it'll come back up just to distribute probably at like 570, and then it'll dump like it did previously, sort of like this double top. And then it's way back down, probably comes all the way back down. And that potentially, again, is like opposite land. Well, that's not cool. No, it's not. But that's why I treat it like I want to treat it. Like I'm going to say, this is not a good play to assume that it's going to bust out and fly to the moon right now. It looks good. It's got potential for it. It easily could be the other way if something changes. And we don't really know whether this dive, and it is a liquidity dive. They came back below that cross. We don't know if it's going to break out and hold that, or if it's going to show weakness here, like they want to go below it again, the operators. So there's a question mark there. So like the news that you're bringing up, I don't know anything about it. I know that this has had some problems, this ticker, so I'm aware that it's had some issues. But I really genuinely think like long term, as long as this doesn't like break down through here like immediately, I'm thinking this could even take a while and come down later. I think it still has a massive potential for upside. Like this $20 is no joke to me. Like I really genuinely think it's going to be back at $20 in a few years. 1 or 2 years from now, it should be back there. But that's not how a lot of people want to trade in this world. So that's why I don't really like look at it every day. And I'm also not like watching the news necessarily habitually. What's up?
Behold the Phantom Menace.
That's a great picture. That's wonderful. Thank you for sharing that. Right. So like, I'm not even going to comment on, I don't know, like the news is the news. If it gets stuck in like litigation, then it could be a problem, but it's California versus Texas kind of stuff. So I don't know. Or a Texas company. I don't know. There tends to be a lot of beef between the two states. I don't know why. Well, I know why, but I mean, in the end, it's ridiculous. It's just partisan politics. So But yeah, anywho, so like long term, does this have a great potential? Yeah. Short term, I don't really care that much at this point. I'm not positioning myself to care at this point. So there's certainly danger in playing too much short term stuff here. But I think it's a good long term play. And NU is kind of the same way. It's like it's doing the same thing. It made this rebound, but it had a weakness here. And it's like, man, that could be a spring. But the only real way to know is if it has a test. Well, it hasn't had a test yet. Like this is the closest we've come to a test. And even now it's like, NU could go back up again. That's what I'm saying. Like this could go back up again and still be distributive. Like people, I'm not saying everybody, but a lot of people would look at that and say it's bullish. And I'm like, I don't know, man. Because if it has this bottom, look at this little triple bottom right here. See how it like pushed up and then it went to a new low and then pushed up again? It's really similar, and it didn't make a new high. That's extremely similar to what we see right here. It's not necessarily like this is the first iteration, this is the second. It's just this is behavior that hasn't changed. That's problematic behavior though, right? Like if you're dropping below supports after making an auto reaction, that's not exactly strength. I mean, I'm not going to call it strength when I don't think it's strength. Now, if I'm wrong and it's not actually dropping below there, fine, but it looks like it is. To me, that looks like weaknesses, like really obvious weaknesses. Yeah, that's 1171. This was 1172. It's also 1171. So it's like, and then it did not make a new high. So it's not yet jumped anything. Well, that's very similar to what we see here on this macro where it kind of hit a bottom, reacted, but then still managed to push through that bottom twice. I don't see that as a change of character. So like, I'm not saying like this is a micro iteration of a bigger picture necessarily. I'm just saying like that is a behavior model that is showing like a severe liquidity problem where there's not a stopping power. So there's clearly a lot of sellers on the big picture and the small picture. Well, look at where you are. You're in the midst of a gigantic widening here. So naturally, you might say, well, I think it's going to go to the upside. Well, yeah, I mean, it could. But I think these are probably going to be fairly equal part moves in the end. You know, upside to downside. It's like both of those are extremely possible. Based on where it is, I say it's probably favoring downside. Yeah, but you just said it, man. It could be going up to the top. This is a big question, right? Is like sometimes, and this is what I genuinely think. I think sometimes, like I've said this before, like people are right, and I think that Nick P, for example, I don't talk about him all the time. I try not to talk about other people when they're not present to talk themselves. I think that's really inappropriate most of the time, but I'm not saying anything negative. I'm just saying like when we first came down, he had mentioned like 190, and I didn't think that was necessarily wrong. I had gotten similar targets between $2 and $1, but I didn't want to put them out there at the time because I was like, well, I just don't think he's going to get there. I think it needs to make this reaction first. So one of the things to consider, for example, on something like NU or even the stock market on the whole, like the S&P 500, you'd have to consider the possibility, right? If I'm thinking that this is possible right here, and I think it's possible. If I think this is possible, then I would have to also yield to the possibility of a bigger picture move like this. Make sense? So for example, when this hit and rebound, it did not make a higher high. We know that. When this hit and rebound, it did not make a higher high. Both have SOWs. There's an SOW right here. Sign of weakness. It's not really the best if it's a spring. I mean, there's just very little volume. It could be, I guess, but then the same thing here. Now, some people are going to say, wow, that is a spring. But see, it's just coiling up. Yeah, but imagine for a moment that your real directive, which we found, remember when we were looking backwards, we said we thought that there was some kind of an easy to read movement towards 850s. Why would you want to go back to 850 on a stock like NU if it's bullish? Well, it's not about wants. It's just about where was it trying to go. Well, right now it's been buying up enough around 940s that it hasn't gotten there. 940 up to about $10, right? So there's a wall here that buyers are currently trying to hold. But notice that on the bigger picture as well, there's also repeated weakness in these drops. You have 1, 2, 3 in a row that are dropping below, right? So it starts up here at the buy-in, which is at 990. Maybe $10 is just better. Just say $10. You start with this buy-in at like $10 way back here in February of 2024. There's an attempt, to like push it up. So there's no lower lows made at first, but then almost immediately there is now another. That's showing a little bit of weakness. Yeah, but that's how liquidity works. You dive into the floor, you get the liquid, you move on. But we haven't moved on. Right? This did move on and made a higher high, but now it's come back down and made a lower low. That's why we're saying it's a widening. It's transformed from something that was readable one way to readable another way. My point is, let's say, for example, that you think that this is possible. If this were possible, and you think that, well, I think it could still go up again to near 14. Well, yeah, it could, because like I said a minute ago, if this is a cat ear, so to speak, and this is like the middle of the ears, and sometimes it goes low in the middle. We've talked about that before. Is it possible that the second ear, which is typically the flat one, has more than one upthrust, like it does a UTAD or something in the middle? Well, the answer is unequivocally yes. That's very possible. So a lot of times we'll have like a paw, and then I almost always draw it the same way, but you'll have an ear 1, ear 2 kind of thing, right? But sometimes the way I'll do it is like this. You've probably seen me do it like this before, where this actually comes down lower than the other two. And this is important because I'm doing it on an angle for some reason. I don't know. This is important because this is actually a liquidity test to the upside, the way I'm drawing it. And it eventually comes back and retests this bottom liquidity. Usually there's kind of like a midpoint, something like that, or whatever. All right. But oftentimes it's middle. If it's not strong, if it doesn't hold up on this creek jump, and again, this is assuming that you made a higher high, which by the way is bullish. In this case, this is pretty bullish looking. Perhaps. Probably would have been more like this. Let's say, for example, you saw something like that. You'd be like, oh, it's pretty bullish. It could come back down to that floor and break out. But if, for example, this never makes a higher high and it has weakness, and then it just fails to, it could still come up again here, but it's failing to jump, I don't know, some other big creek, for example. Excuse me if you heard that. Tooted. It happens. I'm human. If, for example, you're too excited, Booksy. I know. If, for example, this pushed up and was to distribute, but it didn't make a higher high, what do you think would happen if it broke down right here? Well, that's pretty classic, distribution, especially even if this did come up again above this top, which usually happens. You come back to the floor, you'd make an LSPY, and then you have what we call an S-curve, where you're kind of building backwards to the ground. So my goal is really to sort of demonstrate that this is not the way that I'm like looking at the market and trying to interpret things. It's really not mysterious or weird. It's very much just straightforward market mechanics. And typically this is where this comes into play then, is that later you'll find that sign of weakness was actually pointing to some target, right? Because again, if this were to happen, it's usually after that auto reaction. This is usually what it looks like. If it's coming down or something, for example. And then this is part of an even bigger S-curve. And it's all built out much the same way. So one of the reasons that I've stressed it, and I stressed it on AMC and GME, is that they need to make these kind of initial moves. If they do not make these initial moves, then you're liable to just come back through. And I hope this makes sense to you guys. I know I repeat a lot of the same things, but I don't know, man. Maybe if you were to use this stuff, and I guess that's the whole point, right? You should be able to make some money doing it if you understand what's going on here and why this is a failure to advance, you know. So one of the concerns that I have right now is that this could be potentially something that happens on some of our tickers, that we do get some upside push, which I've been saying for a while. I think it's possible. That's why I think AMC could still come up to 461. It does look kind of weak right now, but I'm not shipping it like, yeah, I'm not saying, oh, it's definitely going to drop, because it's not definitely going to drop. Like, you guys are, well, it's already down 2%. It looks crappy. Yes and no. Like, the thing is that has this made weaknesses? Yeah. You can see it. It's evident right here in the drop. There was multiple drops down. Auto reaction, drop low. Is this a sign of weakness? Probably. It probably is. Well, then we're screwed, right? Because we're about to just do a big S-curve down to the bottom. You just said it, right? That this is probably going to happen if you have a breakdown and it fails to advance. Yeah, it's possible. In fact, we would be kind of sitting on the 50% marker right now at 332. We'd be dropping down to 312. Well, then that's it, right? It's then bearish. No, not necessarily. What? Booksy, this is just a big game to you, isn't it? No, you got to like remember this is an iterative motion, right? So like while this is true locally, that's just one part of the move. Now you look at the bigger part of the move. What was going on before this happened? Well, if it's like AMC and you did something like this, then there's this possibility that you actually have another wave here. And that's exactly what we're talking about. Like, there's a possible another wave here that's not being met. Usually there's a triangulation of some kind. We'd have to then look at this wave and say, well, what's going on here? This is its own thing. Could it still have a rebound here and come all the way back up? Yeah. Certain things have to take place. For example, you have to make that jump at some point. Usually that ends up being like a 50-50. Usually it's like a halfway point from bottom to top. If it looks like I'm drawing this diagram from memory, it's because I am, because we see this so often. That's not necessarily bearish if on the bigger picture, for example, there's some other reason that this wave might come up higher, you know, because we're defining this how we want to define it because I'm drawing it. I don't know the answer sometimes, but like this could be very much like a bigger wave where, well, it's probably going to come up higher. So this is really just like a local way of driving the price down for liquidity and then breaking out. And then you ask the question, well, how do you get to the next one? And again, it's usually something like a 50-50. I mean, it's usually that simple. That's why I look at stuff like here and I'm like, oh, there's a drop ledge right there. That's why I use those at all. Oh, there's a gap here. There's a drop ledge. It's a triangulation technique to identify where that wave is. It's very important that you understand like that concept when you look at something locally. So when I take this and put it into practice on something like NU, I can't look at this big picture and say that it's definitely bearish or bullish. But what I can say is that it has signs of weakness, like it's already there. So naturally, if this doesn't make another high here, could you have a distribution that takes it all the way down, you know, to some big picture bottom? Well, yeah, there's a really huge widening that goes really, really low. Now there's kind of a softer one here. Absolutely. Could this be heading down into September at like 850? Yeah. I mean, this is not anything new. I've had these levels on the chart for a while, but that's probably where it would be targeting. This would be like a big S-curve down, potentially. Could even go way lower. There's this really big macro that goes all the way down to like 650. Well, that's really far, Booksy. I can't recover from that, right? 1, 2, 3, 4, 5, right? Like there's a big picture wave count here. You know, absolutely. If this is the bottom and it's all part of 1, this would be 3. You could have a really extended 4. And it could take a long time. It usually is corrective, which I think this already is. It already kind of busted through the bottom. It'd be very likely that this would come back down, at least to hit that, especially if it breaks down locally. That it could come back down and hit that low around $8. Could even come even further. Technically, it could come as low as the wave 1, which is $6, and that's back here. So, like, if you ask me, is it possible that this ends up at $6 before it goes again? Yeah, it's technically possible. It's not always the most common retracement. We could use other retracements to figure out where it might be. I think these were common retracements. It looks like I've already done that. Usually I block this off on the fib level when I do stuff like that. I think this one I just did today, but this is probably a retracement of like a 3.8 or something like that already. That would be a natural place to hit and then return back to the top. And again, because I've said here that this is possible, I can then look at this like big picture and say, well, this already happened. We had this like push up right here and this pullback that went lower. Okay, so what are you trying to say? I guess what I'm trying to say is that even in the midst of all of this, it is possible that we get some kind of a run up again. You know, well, it didn't go down to 8, so I guess it's not going to go there ever, right, Booksy? Like, let's say by the time it hits July 11th, it's here at like 1168. This is really, I think this is important for me, so that's why I'm talking about it, because this is going to be the conversation that we have come August. I know it's early, but like, depending on how this sets up, we're very likely going to be in kind of a mid zone in August. I think that's extremely likely that we're going to be in sort of a do or die moment in August. And you might suggest that, well, this is not possibly going to come back to the upside. Well, it did it here. And if it does it here on the micro, you guys are like, well, it didn't do that yet, Booksy. No, it didn't do it yet. You're right. But I'm saying, like, if this were to happen, then you could look at this and suggest, yeah, it's not impossible that this actually comes back up to near all-time highs. In fact, it may even come back up to this gap without actually making a new high. It would basically be the same as what happened here. And long-term, absolutely. Could this even have like a secondary motion, much the same way that this guy does, and have another breakout going into 2026 or something? Maybe. You know, it may not be that slow. I don't know. That's kind of slow, but sure, why not? You know, if I look at this and I compare it to what we see in the overall picture here, I think it's kind of reasonable. There's a sense of continuity there going into, again, August, September, probably around these earnings reports. I'd have to look and see where this creek jump was. I think it was not this one, though that might have been defined as it. Probably was this one right here. And then I gotta fix something. This is wrong. It should have been that jump. Yeah, it's starting to get tighter. More around July 11th, right? That makes sense to me. That should be about where it is anyways, the tariff junk. I don't know why the tariff junk would really matter to this particular ticker, but timing is timing. But anywho, the overall picture here of that deadline looming kind of is just sideways, right? It's just really just going across the range. And then you have a decision to make. Are you going to go low? Or are you going to go high? You're at like 1130. You're at this kind of halfway point on a gap here. Yeah, that's probably where it's going to be by then. And then you end up with a situation of like, well, you go either way. Which way are you going to go in September? The weird thing about this is that you could still have a push-up just like you could here. You could easily still have a push-up going into August, September that takes off to the upside and ends up back at the top, just like this did, without it actually being bullish long term. Because then you have, again, the exact same situation, but now in a bigger picture, essentially, right? And that's what I'm trying to suggest is that, yeah, it's certainly one of those things where, like, yes, you could have almost something as dire as this. Kind of looks right. Yeah, going into December, actually, that's about right. The timing seemed too fast, but that's actually quite right. Well, that's kind of garbage, Booksy. Maybe not. If you think about AMC ripping into September, we've talked about it quite a bit, that there could be like this big move, right? But AMC has this tendency to run behind the market in that it doesn't always go up when the rest of the market goes up. So you could imagine that in July, maybe on the 11th or something, around that time period, it may be a very similar story. And this is kind of where I'm bringing it around today. I feel a sense of clarity about it because I'm thinking about the way that the operators might be maneuvering right now, like steering the ship. I think some tickers are probably going to go ahead and start an advancement. And what my guess is that September, maybe around the 6th, into about mid-September, I think that's going to be the area that looks more like this. So it's a little bit odd, but like kind of like may look a little bit more like this or this, like these two spots. You guys are like, well, that's really far. I'm not saying it's going to the moon. I've already talked to you guys about this. I think there's a big problem on AMC with the shift value. It may not ever get above 20, but it may be better to say like more like this. Sorry. So this is more like your September moment. I think some of your tickers are probably going to have some interesting things that happen here locally, for example, where they kind of back up and they just go ahead and advance more readily, like slowly. Perhaps around that like July 11th date. It seems reasonable to me because it seems like they're all kind of going into a mid zone there where you have like a potential for further action. And I know we're really talking about apples and oranges to some degree because we're saying like, well, that's confusing, right? But I'm saying like right now, you may end up with a situation that you actually build out for a lot of tickers, end up building out into July, for example. I know this sounds a little out there, like wonky, perhaps, to be like, try to be predictive like this. But I'm starting to believe this is pretty much the case because I think most of your market doesn't want to move. And then I don't know if rate cuts are coming here and it's already priced in, but that's my guess. Is that this is all estimation, right? This is roughly around September 6th. And then wherever the FOMC that follows is, I think it's priced in rate cuts. And I don't know, again, maybe it's pricing in bad news, maybe it's pricing in good news, but whatever it is, whatever happens, we'll have to wait and see because when we get there, we get there. Obviously, this is all estimation. But I think this is kind of one of those moments of like, probably you're going to have something around that time period. This is extremely estimative. Estimative, that's not a word. This is an extreme estimation. I don't know, September 20th or something like that. It'd be like the third week. Have options and junk. You'll have this kind of area where you've already got most things have already built out, but AMC will have gone down probably around the same time period. I think that's very likely. Just like back here, the markup phase on the whole happened for majority of the market, and it was going back up towards all-time highs. I think you're going to see something kind of similar from now until September, and then again, maybe even longer picture looking outward further. Now the question of like, well, do they all come back down again going into January? I don't know the answer to that. But what I would say is that sure, like you can look at each one individually and probably make an assessment that's pretty similar. That's pretty similar, right? Yeah, I think so. I mean, right now, this is basically the assessment that this goes up and then comes back down. It wouldn't be actually all the way down by then. It'd probably be like halfway again. Well, that's the same thing on the big picture. You just did. I know. That's my point. Is like it's the idea of stagflation, the idea of not moving anywhere. It's like, how do you use the news to get you somewhere if you're not going anywhere? Well, you use what's already there, the behavior model, to basically generate a sideways region, and it has to end at some point. And my guess is that it's going to be this 2026 area. Now, this could yield some pretty negative results for some people, because they might think, well, at this point, you're like, well, crap, then it's going to go down into February 2026, if that's the case. Well, I don't know. Every ticker will be different. I don't think they're all going to be exactly the same. But I do think that the idea of this kind of a drop here isn't impossible either. This was like, a few days, and it basically has a massive recovery. It's certainly not impossible that this has some kind of a massive drop before January, and that's more or less like a truer spring kind of motion, and then it comes back up over the top. I would not think it unreasonable to see something like this, like a huge market squeeze event. Absolutely, there's more than one possibility here. But all of that just to say, when I look at this big picture, and it kind of looks like it might be down in February. I don't know. That's like where that is, but I have no idea yet. We'll have to wait and see how this works out. We need a little bit more point of interest, but it's possible. So I think all of this is just to say, like, the confusing elements that are attributed to accumulation and distribution on a micro scale really apply upward, and you really have to let the upward inform, meaning the macro, the big picture, inform the micro. So if this is a wave up, down, yeah, you could have a bigger wave up here, but if on the small picture it's starting to build out like, hey, we really want to go down, well, that may inform the big picture. It's very likely that this is going to inform the big picture. You're going to have a reaction up. And so far, it's been pretty similar on medium term and short term, where it's had this consolidation moment and it's failed to advance. And that's important. I don't think that's a small thing. So I look at AMC right now, I'm like, yeah, like I get where people are coming if they think it's weak because it's down like 2%. I get that. And I'm still of the mindset that it's possible that it's already done. I've already said this multiple times. I'm not going to beat a dead horse about it, but this is absolutely possibly already done. In which case you'll see a breakdown and a hook, but it probably comes back to like near 360 to 390 if it hooks. If it's going to do an actual distribution here, to me it's very likely based on where it is. It'd have to drop here and at least come back up to 350, and then I think it's possible it goes up higher. But it's certainly not out of the question, looking at the way this has traveled, that this is just doing like a double dip here, and this is a bigger. Again, the micro yields to the macro. This could be a bigger shallow S-curve. Like, I don't think it's impossible. And we haven't made a low yet. So on the one hand, it's like, I could look at this and suggest, well, it seems pretty likely, Booksy, that this is going to come down and hit right here around 312. Okay, so what? It hits 312. It's over, man. It's over. Well, again, like, does that mean it can't come back up again? Well, no, it just doesn't. If it goes down to that point, it is that low on GME earnings, and GME earnings is particularly good or something, or there's some big news, and you start seeing a rocket, does that mean we should just like sell immediately and assume it's a fake out? I don't know, man. To me, this is not cut and dry. You have a wave cross down, yeah, and certainly it could stop short of something incredibly good by hitting, for example, these levels around, which I've already had on the charts for a while, like 390s, and essentially that being that, it could come all the way down here and then hit like 390, right? You could also have an early hook that maybe it pops up too quickly. This is what I was most worried about, because I don't like the run up that's early. I wanted it to go ahead and be above it, not be below it going up. I'd be okay with a drop. I'd be okay with it being above it. I'm less okay with a run up into it come tomorrow into Wednesday. That to me is a little bit worse. I'd rather it be on top of that level at 350 or dropping. Because those actually to me would be fine. Like I think that's okay. Well, if that's the case, this is some kind of a widening. It's not the strongest, but it is widening. It's pushing the creek up each time. And then if you have a breakout, you're going to come back up to 362 or about 350. And if it can hold, it's probably going to do a 50-50 up, like we've said before. So you've got a lot of potential here. If it does come down to like 310 or 315, yeah, temporarily that's pretty ugly. It certainly could get you back to 385 though, and that follows, that tracks. And basically I'm making like the exact same measurement I already did. I'm kind of doing it in advance, and I didn't mean to do that, but I was kind of doing it over here in my head. I shouldn't have done that. I should have done it on the right side so you understood where I was going with that. So yeah, sure. If it comes down and hits there, you might be like, it's over, man. We're going to, well, no, this is where things get kind of messy, yeah, but this could absolutely go up and redistribute. And likewise, it could end up being something where it doesn't hit quite as low. You do the same thing up to 461. We talked about this before as well. So if it stops short, and that's why I had it stopping short right here, this is repeating the same thing, kind of regurgitating what I talked about last week. If it stops short, then the 50-50 up around 390 still takes you to 460. So like, this isn't much of a question mark to me. I'm like, okay, you've got multiple options, kind of the same end. I just don't know about the speed. Timing is less important in this regard. Although I would say that largely it's going to happen before the 18th or that week of. And I don't think it's likely going to happen under. So I understand like maybe it looks bearish or it's underneath certain EMAs. I'm reading your comments right now, Hilto. I think that those are normal liquidity dives though. That's what I'm trying to say. It's not a good sign to be beneath those things. Not a good sign to be beneath moving averages and rejecting off of resistances. But in the case of a liquidity move, it's pretty normal to at least check them. What it might be signaling is that there is indeed weakness. That does not mean that you can't go up. And it doesn't even mean that you can't go up and make a higher high. If the goal is to get back up and redistribute, this being bearish down here doesn't mean anything to me. It just confirms what I already thought, which is, okay, so we're positioning in a way that we want to go back down. Well, whoop-de-doo. You know, that doesn't really change much for me. I don't mean that in a mean way. I'm just saying like, it's like, I'm not trying to be condescending or anything. I'm just saying like, okay. Like, I agree it's weakness, but I've already felt like this was probably going to show some weakness and then go to distribute. The question is, how high does it go? If this shows continued weakness right here, mark it off, which we've already done. The widening break here, I went back and looked at AMC and GME. They both have a target that goes back to May 2nd to May 5th. So they actually both made the same target on the same date. Again, people will say they're not in lockstep, and I agree they're not in lockstep, but they are absolutely, oftentimes, in timing terms, making very interesting motions in the same time. So right now, this is the support region right here, and it's right at 27.45 on GME. If it drops down, it could hit higher than that. There's a gap and a support around 28. It doesn't have to be that low. But again, it would not surprise me if it stops short and then still come back down later to that region, maybe here, you know, at a later time. Like, that would not surprise me. So just because it doesn't hit this now doesn't mean it couldn't come back to 27.30 something later. But right now, I'm pretty darn sure that 27.44 is the most reasonable level for a back test on support. I mean, you just visually, you can see it. It doesn't look that complicated when you just look at it big picture. But there's a specific marker that was made before this advancement started, and you see it takes off right there at the 2745. There's a little drop ledge. Again, pay attention to those little drop ledges and the little gap up ledges, because those are really important. And that's where this breakdown ultimately failed. That would be important for a couple of reasons. A, because that's, again, where that support is. And then the fact that it came lower, it was a liquidity test right here, right? It came back below those previous supports, or tried to anyways. Maybe not the first one, I can't really tell. But you can see that dip right here away from it. I would also suggest to you that's probably a trend, and it is. So then you can use that anchor point as a trend, and you can see that, yeah, there it is. We gapped up above that trend. Well, I'm not necessarily saying this definitely gets back to this at a later time. That's a bit speculative, but it did here, right? So after it made that dive, that was the second S-curve that we drew, or the first S-curve that we drew, excuse me, which was like here to here. I don't think I drew it perfectly. I think I was off by a day or so on this one. And then on the big picture, I would have been off by like a week when I first did it, because it was like over here around the 19th as opposed to the 27th. But that's ultimately like, that's the S-curve, right? This is when we talk about slingshot stuff, when we talk about the idea of moving away from a trend in order to get liquidity, and then we back up to the trend. This shouldn't be misread as something that's always bullish, because it could be that this was, again, a distributive action that creates like an SOW, and later you could follow through on that, yada, yada, yada. And that's why you have to pay attention to those motions on the micro. But for now, and then also the big picture waves, that was completed, right? So that's done. I don't necessarily think then that this has to then return to it. But if there's a similarity in terms of trading behavior and pattern to what we're seeing presently, that would be it. That would be it right there. So if we look backwards then and we say, okay, maybe that's the case, Booksy. Maybe it's the case that there's actually a similar behavior pattern going on in the big picture. Where would you place it? I'm not 1000% sure yet where I'd necessarily place it. There's a couple different spots that we could kind of try to do it. This is the one that I have right now, and it doesn't seem like completely unreasonable. There was a ledge here that dropped below. I don't think it's necessarily the best one. Maybe it's a little too high. I didn't try to make this S-curve necessarily. But just like this could have been a breakdown that then retraces and pushes back up. And that completes the S-curve. Very similarly, you can have something like that here on the big picture with, I'm going to lighten these two up. And this is what we've been arguing, I suppose, is that you could have something really similar where this drops down here. And again, you're like, well, that looks like garbage, right? Sure. But it could be the same. It's the same kind of garbage that happened here, where it's like backing up to a support, and then it takes off, and then you have another S-curve that goes up and completes. Like, that's no different than what we're talking about right there presently on the bigger picture. And this is the second half of that upward motion. Correct? Yeah. We just did it. Like, we just demonstrated that is the behavior right now. Those markers are really important, and that this could then signify what? Well, like a middle marker type deal. Maybe it doesn't have to be directly in the middle. It could be a little bit high, a little bit low, but something like that. And then we've got other targets. We've talked about 39 and 40 up to about 43. You could err on the side of caution and say, well, I think it's just 40. It's the lower target here. Maybe it's not going to come up that high. We've talked about that. We found those other ways, right? Okay. So you have a bigger picture potential wave right here up to 40 that, again, people are going to assume when you're looking at it, you want to assume like what has to go up. No, man. Like, again, this just happened right here. It dropped off away from the S-curve. It's kind of like right in the middle. It dropped off and then it rebounds and goes up. I think you're looking at a pretty similar big picture setup potential here. Again, it doesn't have to be exactly the same. Maybe my timing's off. I don't know. But the idea is there that this could easily have like kind of a drop ledge. Doesn't really bother me. And then it rebounds, comes over the top and goes up again. That would be right here. That's like the SOS. Just like this one, which came above the previous top and then chops through it in an SOS pattern right there. You'd have something similar right here. So what does that mean exactly? Just give me the bottom line. Well, what it means is that we should be paying attention to where those downward targets are. Curiously, for GME, I think that the level around, again, that middle, that 2735, 2745 level might be used. There's another one at that I've got here at like 2867, and then there's a final one at 28. And those are not super far apart. Each one's like 50 cents apart. There's 3 levels right here that might be used. There could be something even deeper, like again going all the way back to like this guy or something. I don't know if we're going to get to that right now. Could happen later. May not happen at all. We've talked about that last week. The reason this is really curious to me is because, again, there's clear differences between AMC and GME in this regard, like hyper clear differences. And they're painfully obvious if you're kind of looking in the right places. They're kind of tricky because it makes you think, like right here, you would think, well, this is going up, pushing up to a new high. Surely AMC is going to then come back all the way up to the June levels, right? It has to be the same. But this is the curiosity, okay? When you look at this big picture, if this were to come back down, and it already broke through, I think, the trend here, I don't think there's any question about that. Perhaps that's probably a good place to have started. Is just like, well, it already dropped that trend right here. That's probably likely where that is. And when does that get there? It gets there on the 16th, right over here in July. That's like a day or two off from what we had. I wouldn't think that's super unreasonable. So maybe this is more like right there, so on and so forth. Okay. Doesn't really make a huge difference to me, timing-wise. This overall, though, I think you could look at this and suggest that, yeah, this would maybe lead you to think perhaps AMC is going to do something similar. But I don't think at this particular point in time that you could make that strong of an argument, because when you look carefully at where that May date is, this is the May 5th date, the interactions there are very different. The May date for AMC is way down here. Way down here. It's actually the 265 level, which is the level we kept seeing pop up over and over and over again. That marker right there is significant, because we know that if it came back down, and I marked it off, the target on the widening break, if it came back down, I don't think it's going to recover from that. Because if it drops down that low, you've got this reactive motion here, and I think that we've already kind of covered this, so I'm not going to go through it again, but this is likely like the middle of that drop down level. Again, could it happen sooner than later? Absolutely. It could be a hook and then just start down. It could drive the price back up to 390 and then just start right back down, right? You be in a distribution mode faster than, you could even see it. It'd probably be very quick and brutal. And again, it would look like a flash in the pan in the big picture, but you'd have this kind of back test really fast and then drive the price right back down. And again, once you get down to that point, it's like, yeah, I don't really get it at that point. You're kind of just like going backwards. So we talk about 407 possibly being a top. Well, if it does have a rebound and it only comes up to 350 or 361 or 365, or if it comes up to 390, none of those are higher highs, then 405 or 408, whatever it is, 410, if you want to use after hours, those levels would be your 50% marker. We then have to look back and say, where is the liquid center here? I mean, it's debatable. There's a couple different ones, but the ones that I would use probably the most are right here right around 270, and then again right here around 3. Well, that drives you down to 229, 230. That's already a lower low. We don't even need to do the second one. We've already done these levels, right? Like we've already observed these and checked them out. And that's why we get these markers from down bottom. The 238, it's already gone far enough to get there, which is a lower low. That's good though. That's a spring, in my opinion. You said the 48 cross under 200 is not a liquidity grab. It's a new low 90% of the time. That is a liquidity grab though. Like everything's a liquidity grab. But like just because this goes down, it's really no different than what we're talking about like here presently. And technically like this already had this push up. I'm really saying that you've got to be careful for something like this, for example. So like this probably breached through some important levels as well. And it's a liquidity grab, but it's not a liquidity grab to take it up to necessarily be new highs. It's just distribution here. So this starts with the same motion every time, and then it has this kind of reversal where it jumps the creek, which this did on the bigger picture, slightly bigger picture. So you see this? At first glance, you would say that doesn't look bolt bearish, but it already had made that dip beneath the bottom. Well, we kind of did that, we kind of didn't right here. But it's a similar motion. Do you understand? Like, I don't feel like we're saying anything different. I feel like I think you're trying to make a point that it can't come up again. I'm just saying that I don't agree with that, but I also just have to say I don't agree with that. I think it's very possible that you could still see a hook here, and this happens quite often, where it makes you think that you're going to go. It fails to make a higher high, which this did, failed to make a higher high, drives down, and then it does it again. That's like UTAD, and it would probably do that with the news of GME earnings and fail here to come above with any meaningful effort. And that's why I said it could be like a flash in the pan where it's like open and then immediately drops below again. So I'm not really going to argue about EMA crossings. I think you're probably right. If they're consistent 90% of the time, then they're consistent 90% of the time. But what are we saying, I guess, is that, like, are we saying anything different? That's what I don't understand. I don't think we're saying anything different. Like, this has already dropped beneath this cross. Like, it's beneath it right now. It already had a wick. It's not looking awesome. But I don't think that means it couldn't come up again. I think that's a silly interpretation of it, personally. You're saying like, well, 90% of the time it doesn't come back up again. Okay. I mean, that's fine. But I've already talked about like this is a potential death signal for us of this like popping up and having like a head fake going into GME earnings. I'll just have it go a little higher so that you get the point of what I'm trying to say. I'm saying that I don't necessarily think this couldn't come up again. So you're saying there's a nail in the coffin, and I'm saying that you might be right, but I'm also not of the opinion that it couldn't, on the bigger picture, lead to a larger push. Whether that means that it comes above the top or not, I don't know. It's really kind of odd to me, though, because you're talking about like crosses and stuff, and I'm like, well, in order for it to cross down, at some point it had to cross up. Like, change of characters in the market happen all the time. The only thing that's required here is that this change character, and it could come right back up above. And also, when we talk about EMAs, it's the same thing as like when it's advancing and it pops above. It's like at some point, this could have just kept going when it jumped above this 30-minute, every time. But it has some distributive action. It changes direction. Like EMA crosses are important. Don't get me wrong. They are important. They're very important at times. But like, they're also testing on like multiple levels. They're testing like dozens of different things. So well, 265 is the level that we would come back to if this breaks down. So, I mean, we're not in a disagreement. You just said to me, you said I did not say nail in the coffin, but you did say the 48 cross under 200 is not a liquidity grab. It's a new low 90% of the time. So you're basically saying that 90% of the time it's going to make a new low. Okay. That's about as close as you come to a nail in the coffin. If you're saying that it hasn't made that cross yet and it might make that cross, that's different. If you're saying it's already made that cross and 90% of the time that means a new low, then you're telling me that it's basically as sure as 90%, which is very high. It's hard. We're not having a real conversation to some degree because like I'm not reading everything maybe in the same way that you want it to be read. I don't know how you're saying things or in what cadence, I'm just reading through chat messages that are really for me kind of, I feel disjointed because I read them disjointed. That's my fault, not yours. So I apologize. I really do. I sincerely apologize if I misread them. That's not what I meant. I think my bigger point though was just to say like I don't think we disagree. I think we're just talking about like two ways to accomplish the same thing. Because to me, like going up to 460 is still probably distributive, like more than likely. So for me, it's like, that's not any different. I just don't know the question of liquidity beyond what we've already said. So most concerned right now because we're failing to make higher highs. That's my biggest concern at the moment. We've pushed up resistance a couple times, but like it still hasn't made a higher high, right? So that tells me that if it's a shallow S-curve, it's got to prove that still. So the burden of proof right now is on bulls, not on bears. Bears have right now the advantage. I'm a fairly contrarian trader, so I like to look for those. I like to look for those opportunities where I think something might be a little bit off. And what I'm suggesting is that, yeah, this is looking kind of bad, but I'm curious if there's a missing piece here. That's the argument that I've made repeatedly. I wouldn't be making this argument, guys, if I didn't think it was possible. So it's the same argument I was making back here when I said I thought it was going to go to 4, and it did. But I was making that argument for a while, wasn't I? It started back here at 335, and when it didn't go, it's like, well, now you're kind of just stuck in crap land because it starts doing things in an iterative way, and that's what happened. It just kept iterating down, and you have to wait for the change of character. When the change of character happened, I'm still sitting here like being a contrarian to myself. Like I said it verbally, like this is different. This is different than what happened here. We said it repeatedly. It's different. It's not the same. There's no sign of weakness. It's on the Discord. You can go look at my messages when talking to the bear side. I'm like, yeah, but you have to concede it's different. So there's a possibility it goes down. So you trade as if the possibility is real and that it was a real possibility, but you know that it's changed character. So I'm trading upside, and then it goes to 4, and now it's done, right? Well, at this point, it's kind of the same way. It's like I know that there's a high probability that it's going to come down. In my opinion, that's already kind of set in stone in some ways. It's not a guarantee, right? But I've had this in my mind for a while and it has not shown me a change yet. I'm willing to suggest to you guys that if it does show a change of character, I genuinely feel that, yeah, if it shows a change of character here for a bull move, I will let you know as soon as I know, because I think, yeah, it's reasonable that it could change character and have some kind of crazy bullish move. But until it does that, I'm under the assumption, because that's the way it's been trading, that this is not going to do that. So there's a sense of like, again, like you're playing it, I play it like a contrarian, but then I immediately flip-flop as soon as we get to where we were going. I hope you guys understand that. It's not because I'm suddenly like in favor of one or the other at this particular point. It's more about I just need to be a contrarian. So now I'm looking at it like downside seems to have the advantage. The contrarian play at this point is actually upside, in my opinion. So now it's flipped. So I'm waiting to see if there's a change towards upside short term, and then I'm going to be curious to see if that's a bear trap, or essentially a bull trap, the real bull trap towards downside, which sounds kind of confusing, but the operators do crap like this all the time. It's like what happened right here. It's like there's clear evidences, and this was looking at 2020. There's some clear evidences that this is kind of weak. It left things open, right? It didn't kind of seal the deal by doing any kind of a real creek backup here. There's no backup to be had. This was, again, looking at a bars pattern from 2020. At this point, you're like, yeah, it's probably bearish because it didn't get to the lows. It left two gaps, multiple gaps. It didn't check the creek. You're like, yeah, it's bearish. And you're like, well, then it's just going to come down. So like advantage is bears here. You're probably thinking bears have the advantage. It's going to come back down. Yeah, this is it's exactly the same thing we're talking about. So you would have expected that there could be a potential right here. Yeah, there could be a potential to sort of like break down and fail to advance right here and then drop low. Absolutely. If this has some kind of distributive action and does like a hook at that point, just like we're talking about right here, well, that's it, right? Yep. Then bears have the advantage. This is kind of what we're facing at the moment, except we didn't really do a very good job. Obviously, we haven't made those particular advancements, so it's a advantage bears at the moment. But I'm like sitting in this moment right here saying it could happen, because if they didn't really get to where they wanted to go, and this is maybe like that in that regard, where you've got this kind of build out, it's got weaknesses there because it does need to come lower. So the weaknesses are showing you right here that it does need to come lower. Well, it's easy enough to suggest, well, it just does it now, right? Or it does something like this. It doesn't go up past 390. That's the secondary one. So one is just dropping at a mild hook. The other is 390 with a hook. It would be weird if it came back above again, but that is a possibility, because if it comes back above, then you've got a 50-50 up to 360, and then you do it again. And it's like, well, that's just the same thing, but on repeat books. See, that's not very inventive or creative. No, it's not, but it doesn't need to be, because it's just a method of distribution. So you could do it like immediately if you think this is the top. It doesn't surprise me then that these are essentially identical patterns. One's just bigger than the other. This actually drives the price down farther long term. And arguably, like that's kind of the argument in my mind for like going down farther is like, well, if you're looking at the on balance volume and you look at what happened in 2020, the second move is the bigger part of the on balance volume shift anyways. Like it needed to happen to really drive that up. And then to come all the way back down, that would be a massive nosedive. Could you do it right here with like a smaller drop? Maybe. I think it'd be hard to get to maybe a low on balance without the extra push because they didn't do it. And I was trying to say that before, like with the I haven't looked at on balance today, but last week we were talking about it, and I was like, yeah, I could see it going up again because it hasn't made that move yet. Oopsie. You can see it right here. Part of me is like, oh, it looks like it's breaking down. It's done. You can see it. It looks like it broke down. It did. But then I'm like, well, people are going to hate it, but I have to be a little bit indifferent about it, or at least unsure about it, because, yeah, I mean, it could be done. We talked about this previously. Like, that could be it, and it has like a really weak push with like a hook. Looks pretty much like this lower scenario. You don't have any scenario where it drops and then comes back up, Booksy. Yeah, because I make messy charts doesn't mean I want to have everything all the time on the screen. I try my best. But like I know that in the back of my head, like if it jumps back up here, it could just go again. That's not a big thing for me. I'm just looking at it like, well, these are the more common. Visually, this is like the more common scenario, I suppose, where it just tries again and fails and then comes down low. This kind of gives you a picture of like how that could happen. But, but what, Booksy? But let's say it found support here, right? On top of this trend down, then what? Then it comes up to here. It's like, that's the next stop. 50 million and then potentially like 60 million. That puts you right in the ballpark of where you want to be. So like, it should not be like lost on us that is basically exactly what we're saying on the price action. We're talking about a 50-50 drive back to the top. That's the contrarian play. It seems way out there, bizarre, but that's the one that the operators get the most bang for because they actually don't have to put that much money into it because it looks like it's breaking out. Like price action would look like, this is so weird too. This is starting to look really similar to the distributive setup again, but I think that's, personally, I think that's kind of a given. It never made it over the high anyways. That's a different story, different chart. But yeah, this is where we get to that flip up to the 461, which we did find a long time ago. We just didn't necessarily think it was the most likely target. So I don't want to be like vague on purpose. I'm just saying that like this is not one of those situations that it really is a situation of like if you were not in this play already, I would be saying, and I can't give you financial advice, but if you were not in this play already, I would probably be saying that you should be waiting for confirmation. And that is the 362 mark because it really isn't one that's easy to read. Liquidity is kind of low, which is a positive for bulls right here, but it wouldn't take much. It'd just take a head fake to like 350s. And considering earnings is around the corner, it certainly seems like a possibility. And then you're like even more confusing is the fact that this could technically drop low and still rebound. I think it'd be more likely if it did drop low and rebounded that it wouldn't go all the way to 461. It'd be more likely, in my opinion, that it would go to, because 461 doing a 50-50 doesn't need to come that far down beneath this drop ledge. It doesn't need to come back below 327. So it's a bit too far for liquidity purposes. But I do think it's possible that if it dropped to $3.08, that you could have a pretty massive UTAD motion above 350. That's what I would suggest. So the wave here could correct in the same way that we're talking about here, like this scenario. I'll just make it like a different color, like yellow. So it still could come up above the 362 top, possibly even up to like as far as 390 and be bearish after a bigger drop. Does that make sense? So it would look like a big run up is happening, but then it would just stop when it got there and it would drop back down. I just don't know if that's enough. Maybe it is. We'll watch on balance. If the on balance like rockets to the moon, if something like that happened and then the on balance went crazy, I'd be like, okay. Like, I guess that's that, you know. I should probably just simplify these. That would make it easier because my charts are messy and I think it's confusing. I really like the idea of these supports being here, but the simplified version of this is as follows. Let's get rid of that one. I should have made this a lot simpler. So one of them would be like a hook that stops short and probably just head fakes, and then we come right back down. This leads to two other possibilities. These are the ones that are the most probably infuriating. Easy enough if it comes above. That's why I said I'd prefer it be either just dropping or like already down there or coming above. I don't like this one because it's probably the most difficult to read. Yeah, honestly, I think if it dropped first, I'd be a little more comfortable. If it drops second after a pump, I think I'd be pretty frustrated by that. And then you'd have like a potential up thrust. And it really is just a smaller version of like this, where this essentially comes up, maybe hits as high as 390, wouldn't have to go that high, and then comes backwards through the bottom, so on and so forth. And then the last scenario, which is kind of a weird one, but I wouldn't mind it so much, is if this drops first, I think it's better off because it wouldn't have done the head fake. I think if it drops first, there's a possibility this goes up pretty far and could even come all the way back up to the top again. I'd be questioning it, but the whole way, but at least it's possible. I think this could have a dip and potentially come all the way back up, so on and so forth. These to me are like the three most likely. And know they're all kind of a little different. I can't guarantee anything other than what seems likely is the distribution level would be 362. So it's even if it distributed, it's pretty common to come back above that. It would be like a wick in the distribution. It's most common that it's going to come above 362. In a dive down low, in both of these cases, you're looking at the recent lows of 323, but specifically I was looking back at like 308. I think that's a pretty strong probability. 308 is going to be a contended region. And then I'm not changing that because I think that area is ultimately going to matter. And then we kind of have to go forward from there. I've got the other scenarios on there. We'd be looking at 265 coming down. Big picture is a little different because, again, a number of things could happen here in the middle. I don't want to get too nitty gritty though. I'm trying to like simplify it. This isn't really simplifying anything if we do that. So, but I would expect there to be a just like before, like a backup period. Actually, you should use this red, not the other red. So we had talked about it when I started the stream because we were talking about like MPW and some others. And I was saying that like there seems to be a pretty strong trend here in the market to have a Yeah, and I guess there is another scenario where this just goes up high to begin with. I don't like that one. That's actually the worst one. So if this were to go up high to begin with, it's possible. I really don't like that. It's just order of operations. It could happen here. It could happen here. It wouldn't make a huge difference. I think to keep it sort of simple, what I'm going to try to do is, because I think this just complicates it too much. What I want to do is I'll do that. And then if it goes too high too fast, I actually think it could just go ahead and break down. That was the other one. That one's only going to happen if it goes above 362 and then fails. Like there could be a UTAD, but it's not likely going to make a new low and then UTAD. Instead, it would just go ahead and do like a double top and then it would just drop. And in that scenario, you're just going down at like rocket speed because it's going to favor this trend, which is incredibly steep. And that's a pretty gnarly scenario. I'm not really even sure how to illustrate that. I guess it's similar. It's just really fast. I think if this happened, it'd probably hit 265 within a matter of like a week. It'd have to come down really quick or try to get there really quick. This one only happens if it pumps above 361 first. That's like the worst. If it doesn't quite get there and it backs up, I don't think it's as bad. If it goes above it, obviously it's not bad. So we can go low first. That's fine. That would be okay. I would think that's okay. It could be before earnings, could be right on earnings. I don't really care. We couldn't do it in a way that it goes over the top first, though. That wouldn't work. It wouldn't have any real reason to come back. But I don't know, man. AMC did that before. Remember, and it's just dumb like that. That's not something I can predict. This is what happened here. Remember this? It's like, you see how it already had made like the weakness? It actually came down and made a new low, and then it came all the way above the top, and then it came down again. I mean, like, this was the most bizarre thing I've ever seen. So this has happened before, but that's like a one-off. Normally, it would not do that unless there was a change of character, so that'd be highly unusual for it to go up above, down below, and then back up again. Be extremely unusual. This is more common, that you would have a more mild fake out advancement that just doesn't come above, and then it would drop and then go up high if it's going to distribute. Again, probably around earnings. I'm kind of putting all this stuff in a corner here, but I haven't really messed with timing yet. I'm just kind of looking at it. It was something like that. I don't know. It's hard to say. Sure. This is a weird chart. I know my own mind about it, but I'm thinking that I'm not doing a very good job of explaining why that would be that way. It just is what it is. Yeah, man, I think this would be like super fast. It'd be really low, like really quick. It's like too quick. perhaps. Well, yeah, so what this is like a double S curve. So this would have to be like a 1 and then a 1, 2, where it goes like sideways into another S curve. Is confusing. So what you'd have is you'd have like a first S curve and then you'd have a second part that goes lower. 'Cause you can't do it in one go. It's too far. So then they would take it really slow. It'd be really boring. But you'd come like this way and then you do it again. Yeah, probably be like here. This is where you come back to the 265 level, finally. Yeah, this is a bit of a weird scenario. Not my favorite. I don't care because in any case, like I know what I'm looking for with the distribution stuff. These are all kind of the same thing. They're just one of them's like longer and the other's shorter. And it's just how quickly do you get from A to B? And I'm not sure what's preferable. The question of July 11th is an interesting one because if the market's going to go sideways into it, maybe it does have to do with where we were anchored on the first and second and just kind of coming back to those levels. This could certainly get you back down to those levels around that time. That's the April 2nd right there. That's the April 11th right here. That would be fine. That would make sense. And that would be like sideways. So back down to 265 or 270 something by then. I don't know. It's all ugly to me. It's an ugly chart now. I'm probably going to have to scrap this chart, to be honest, and just redraw it because it's starting to get, I'm getting a little lost in my own lines. That's not a good sign. Not a good sign. Yellow and red both follow the macro trend here. That macro creek, they're just kind of wrapping around it and forming a distribution along it, which is this white one. And I think that's a good place to hang your hat. One is just very steep, but it's really the exact same thing. I'm like staring at it. I'm realizing, yeah, because you have to cross down here and then back up. And it just depends on like how you want to do that from a speed timing perspective kind of thing. And I don't know. So one basically brings you down to the finish of that here, and the other brings you to the second cat ear here around the 11th. So the 13th maybe being a bullish date for a temporary bullish date would be reasonable. Otherwise, they're basically the same. This is the same cross down that you would experience here. It just depends on which one you think is more likely. And I don't really think it matters. At some point, they kind of catch up. The thing about this red path is that if it already happened and you already did this backup, you're not going to go back up again. What probably happens is that you have like a head fake and you just kind of drop low. And the thing about the red path is that if you take that red path, it may seem inconsequential, but it actually gives you more time to trade the bottom. So the red path, if it doesn't ever have another high, it means you're trading low more long term. So the downward motion here probably comes back to a lower creek. Probably this guy, like way back here. This is where that cross up happened on the change of character right there. So it ends up being in the same region in the vein that we thought it would be, like right here, but it'd be way sooner. And I don't know why that would do that exactly, other than it just would. And you'd spend more time in the bottom. So you'd probably end up being down there for almost a month. Which, I mean, in some ways, that kind of makes more sense because you would want to spend more time down there. But in other ways, I'm like, I don't know. Who cares? It's like in the end, spring is a spring. I think Stockfather would say that you want to spend more time in the spring, so you'd probably suggest this is likely. It's just a question of liquidity. See, but I just don't think this is any less likely. I really think it's like the same thing. It's just happening much, much, much faster. Yeah. Everything could be in that place. The ups and downs are probably all in the same spot, but the where you are would be determining factors of where you go next. This could be like a massive sell-off. Anyways, so with GME, we're looking at these S-curve patterns building out. We're saying that there's an argument to be made, pretty easy one actually to be made, that we're going to back up to maybe some support level. Previous top here at 29, which is basically where we are right now. This is already been checked right here, this level. That's one. The next one is, I think, at 28.70, and then the final one more likely is at 28. It could come as low as that May 5th one, but I'm going to hold myself back from that right now just because I'm not sure. And I don't really want to deal with all the same things we just did on AMC implication-wise. I think it's one of those levels, and it really makes very little difference long term until you get below 27.45. If you get below 27.45 or 44, then things change a bit, because if you make a weakness here, it changes the potential for what happens later. If you don't come below that number, I don't think there's much change in that. It is a pretty deep backup, but I actually think it's fine. Like, it wouldn't necessarily have to come down lower later. You could just kind of take off and stay elevated. So there is a particular difference in that regard of, is there an SOW here? It hasn't happened yet, but I would say this is like the SOW realm where you have to contend with possible sign of weakness, and that just, it's a little ways off. So that's it. Yeah, I really think that this push up, it may happen because of the trade talks if there's news, but I'm still thinking that we get this pump into Wednesday, and then I don't know, by Monday it's like the whole market could be in a very different spot. I wonder if there's something I'm missing here on the S&P. Well, I guess aside from the fact that that wave might be complete, it's only really complete once it gets up there, I think. Pretty far. So you think it's going to run to all-time highs. I don't know why, but I think it's making a widening. I guess that's where I'm going with this. And I'm not sure if there's a good reason for it other than this push down and then this push up. But in this particular model, I had it going up and back down again and then back up, which is strange because it's like, again, kind of contending with the idea that this could be a widening is a bit odd. But I actually think that's probable. So this target at 650 is a real target. It may hit there. I had 633 as a target. It could go all the way up to 650. But it's based on maybe how high this push goes. So like if this right now by Wednesday pushes up pretty far to like 615 or something, it's a bit different than if it only pushes up to like just underneath the previous all-time high. I think you're going to see that as a transformative thing. So the lower estimation would suggest that this probably comes up to near 610, which is essentially like the previous all-time high, 612. That makes sense. So it hits like that marker and then rejects. And it does so on like good news. But then there's like a weakness here. So the market chinks it back down. And I don't know what happens in mid-June, but I'd have to have something happen. So where is it going back? Probably here. 564. Yep, that level. 560s. So I don't know if it has to get that. Maybe it doesn't go all the way down. Maybe it goes up again first. That wouldn't surprise me either. Like it double tops on the widening instead of going all the way to the bottom. That would probably make sense. Again, it just depends on how high this one pushes. Right now, it's not pushed up high enough to really make a huge... It would probably only barely come above the top. So at this moment, it hasn't done anything that's particularly noteworthy. Like if we drew the trend right now, it's very low. It may not even go over the top later, but I think this is possible. That's very close to what happened. Leave that alone. It's the same thing. So I'm going to get rid of it. Sure. So let's see how high it pushes going into tomorrow and the next day. And then I think we're going to revisit it by about the 11th. That's a bit of a rug pull, I know, but... And it's very... I know. You guys are probably like, what are you doing, dude? I'm not sure for a fact it's going to go up into the 11th, but we did look at this previously and do the S-curve there. If it doesn't go up into the 11th, then it's kind of like what we have here on AMC and GME where it like pops on the 11th. Like the whole market gets a little quick pop and then it's done. So the alternative there is not really that different. It would be like this coming down, for example, and then like trying to get low. Maybe it fills this gap here at like 580. I guess that would make sense. And then does that. And so it's actually at 580 on the 11th. And then it has like this big pop. There'd have to be some reason for that, but we would be able to determine that at a later time. So a 1, 2, and then a low, and then a 3, 4. So actually 3, 4, I have them going down, but a 3, 4 could go up. Maybe that's part of this is like a it's so backwards though. Well, then August is red. Yeah, and then August is like a big retracement period until near the end of August. That would be a huge like macro widening. That'd be crazy. It is a little odd, but remember when we looked at the S&P 500 and we saw that they were doing the same thing twice? here. This is the same exact it's like the same order of operations in terms of these checks. So they're walking back up the same levels the market is on the whole that we were walking up from August 2024 on. So that cycle idea of like yearly cycle here, I don't know, it kind of jives with me. What was that, August? That's August 5th. I wonder. That hits like a peak or something on the 5th of August. Anyways, it could be very flat, sure. Like I said, it'll be kind of determined by this widening here to some degree. Last time, even though this did widen, you can see it didn't actually go up to the top. So there's also that debate of like, well, maybe it has that, but it doesn't mean it has to go up there. No, it doesn't. But I do think there's a bigger picture S-curve here. So if you look at that, then you look at the range here from bottom to top, that should be the extension on that S-curve on this M-top, which does follow suit. That's a really clean, wow. Okay. So yeah, that's the same. That's kind of crazy. So from a Elliott wave perspective, that was the same that we just did on the wave. I just did a wave markup here from this low up, but notice where that lands. That's the same as the mark here on the S curve, which is kind of bonkers. So I think 650 is possible. I would be extremely bearish at that point, though, like very cautious. That to me would be like a market top. Yeah, that's kind of wonky. I wonder, something even simpler than that. This is like way up here. Well, if we use this one, wow, yeah, so that's this peak here, which is the beginning of this structural widening. This is a cool diagram. Actually looks pretty straightforward. Right, well, this could give you evidence of either one. Doesn't have to mean that anything, but it does drop through right there and start right here. So it starts in March of 2024, and it goes through the drop here at the peak, February 2025, and you can see that it's consistent with the model here again. I think we're going to hit 650 on SPY, near or around the it's going to be a bit of a mess, because if it goes down, it's going to look really bad. It's going to look like it's not going to go. And it's extremely possible, because this is where we had this happen before. It went up high and then it came back down. And there's like a final push up. So it would look really ugly. Yikes. That's a YOLO play for sure. That would be one heck of a call out if it ended up dropping here and then going all the way back up. Because you'd be looking at a huge move, but it's ultimately like a massive distribution motion. I hate to say it, but yeah, it is. Well, why does it have to distribute, Booksy? What if it just kept going up? Here's my thought. So we were talking about this just a minute ago, and I said the same thing, but I said it about. So here's my thought about this, okay? I know I'm getting a little all over the place, but remember how AMC was going down into a spring, and we were like, well, it went down into a spring when the market was going up into its all-time highs. That started in September of that year. If you go back to COVID, I know this is like one example of amongst many. So maybe this idea that it has to come really low is unwarranted, and I would agree with that. But this was September of 2020 right here, and it does go down into November, and then it breaks out. But what's important is that from the bottom up, this reaction was consistently one direction, and it just has this backup period here. So there is like a backup stage that occurs, but this is right when AMC is in its double top formation, something like this, and AMC's going down for like a spring, right? And then what precedes is that as this breaks above all-time highs, and it does, and going into January of 2021, right here, this is where AMC finally plays like catch up and just kind of goes all the way back up. And GME, of course. But unlike AMC, GME didn't go back down for a spring there. It had already done its lows, and it was still chopping upward. So GME has a very different look as a result. It basically has, like if we were doing them in the same way, this is probably not a good way to draw this. But if we were doing them in the same way, GME would look like this, I suppose. Neither of which, obviously we already know this, but like neither of which stops. GME does stop there. GME actually goes all the way up to like its peak. And it's doing this stuff from here on until June 2021. And I'm doing this really wrong. I should do it according to the proportion. So it's like already hit the peak. It's going to hit. And it just has like a second move up in June. And then AMC has this really long-winded reaccumulation as its second move up in June. And it goes back to its all-time high, or goes to its all-time high. But meanwhile, the S&P 500 and the small cap ETF, the Russell 2000, so on and so forth, they're actually both doing something kind of similar at that time, which is they're creating higher highs like the whole time. But they don't reach their peak until, weirdly enough, the way that the liquidity moved anyways, was that they don't reach their peak until the other two are about to break down in December and January. December 2021, January 2022. So by this point in time, AMC and GME were doing their like cat ear distribution stuff, right? And that's where that's happening. For example, on AMC and GME, for whatever it's worth, they were both in that distribution model already. So, and I would even say GME was even a little more different because its COVID drop was already really low. So it was even more dramatic, but it looks like not very dramatic here proportionally, but it was more like, I guess it was like this, right? But you get the idea, okay? According to where its COVID thing was, it was higher up. COVID for GME was really low. It was already down low. It was like it's spring. So it's a little confusing. But like, yeah, I find that to be interesting because during this time period, this is kind of where we're thinking that August might be. I'm wondering if August and then February, if those are the two dates, August and February. I wonder if, at first it looks like the market's ahead. So while this is doing some kind of a topping motion, oh no, that would make sense. So then, because like AMC hits its low lows, November. So this is a little early. October, September. It's all kind of off. Because November is where AMC had that bounce in. But it goes into its final distribution. So it bounces. Well, I mean, it could be another one of those moments. It bounces but goes down moments. That's like this guy right here. So I think that the bounces but goes down moment is here for AMC. So this is kind of like the final action for AMC. This is like this is kind of that November area. So the bounces and then goes down to a low. I know it's already done that. You guys are like, well, it's already doing that. I know, but we're talking about micro iterations now. We're talking about smaller and smaller pieces. So some kind of a bounce in July on the 11th, and then it goes low. So that's where the market on the whole is done with its backup, potentially. It's really hard to say because I wouldn't know. I guess if it goes down low already, like it could just be there instead of going down again. Yeah, it could just already be back to where it's going to go. If it drops really hard down to, that's a retest of that other trend as well. It doesn't go low again. That's this one. This is definitely not a bearish scenario because this would be like a massive backup. And then it goes rockets all the way back to the top by August. And then September is where it starts pushing out again. I'm sure there's a lot of bulls out there that are looking at this, but that's where it would happen because it would be like widening right here and then break out of the widening. And then by 2026, this is ridiculous though. I don't even know where you'd put it. I guess it doesn't have to be that extreme. I mean, I'm making it very extreme, but if it's just another iteration, it doesn't have to go anywhere particularly high. That's what I'm trying to say. That would have to be right there, though. That would be a breakout. Yeah, that's right where it needs to be. That's kind of crazy. Yeah, that's a breakout right there. So I think this might be possible. And that's September 6th. This is weird, a weird one. Because I would not have imagined it doesn't come back down again. This kind of makes a case that long term it could be really horrific. It's kind of like doing this right here. Like this guy. I know that sounds weird, but it's almost the same idea. It's like if you avoid going low here, like everybody's like, oh, it's bearish, it's going to capitulate and come back down, but then it doesn't. Instead, it just goes up. But it left all of this stuff behind, like gaps and junk behind, and liquidity problems behind. I wonder if it's gearing up for another March kind of drop. So that's like the first move down. That's like this one, the chinks in the armor. And then it does like a big S curve up into February. And then it just has like the most massive market correction ever. Going into I don't know how that would look, but it would have to go really far. Like this. You guys are like, what? Nah. Well, the thing is, while that is kind of bad, it actually is a bull case long term because anytime it's done a widening on a top like that, this took multiple years. This was 2018 to 2020, so it was 2 years. 2 years would be 2026, yeah. So that's July or June 2024. It would be June 2026. It's the same exact timing. It's way more dramatic perhaps. And I don't really know how high this is going to go per se. In this case, if you look backwards at this one, it looks to me like, I'm not going to extend that line. It looks to me like it went above. This is a crazy setup. It went above the top, but not by much. It's really, really similar. I wonder too about this. Yeah, look. See how that checks the weekly right there, and then it leaves, goes way back up. We just did that. We checked the weekly way back up, and then it plunges beneath the weekly in COVID. What could possibly cause that to happen going into 2026? I don't know. I don't know. That's a really big move. I don't know, man, but we know that sometimes when the market wants to go, it just goes. It finds a reason. It was like that sudden squeeze that we had, you know? And I was like, I think the market's going to squeeze. There's technical setup. I don't know exactly what's going to cause it. And then there's an announcement, and you're like, oh, there it is. So I don't know what would cause that or how you could possibly know in advance, but the setup is pretty solid, and it does make for a good case. If the market did something like this, it would actually make a really strong case that we were making earlier against AMC, unfortunately, which is that after 2026, it doesn't actually get up. It goes up to the top here, but then it doesn't get very high, and it drops really, really low. Are they trying to get below 500 again by using a double flush here? I wonder. That 450 came up so much in conversations this year. I wonder if the goal here is to drive the price up in a way. Maybe it's really slow. It's not actually that good. Maybe it looks really bullish. It doesn't have to be that far. But I wonder, this goes to like 670s, up to 700. I wonder if you can drive the price. Are they trying to get back to this like liquidity shelf at 413? It might be. That's the same level. I know I'm kind of just doodling stuff, but I'm losing people as we go. Guess they're not interested in the market, stock market moving. Or they think I'm full of garbage. It doesn't have to be this dramatic, but that's a huge market drop. I'm not sure why I think that's possible, but it seems possible to me. It's essentially just an iteration too. It's like the same thing twice. So perhaps this takes a little longer than expected, but that's like the buy-in before the push-up into February. So this actually would make sense because for AMC, the motion is the same. And then this drop, which is likened to the COVID drop, I know it's a little backwards, or likened to this drop, did propel AMC from like all-time highs back to like extreme lows. I know that in this case, it's like, well, that's ridiculous. That's a huge, huge move. And I understand that. I'm not sure if this is reasonable at all. It's like a 40% market, bear market kind of thing, but it may not need to be that extreme, right? Depending on how things go. we may not ever get below like this particular level here, which might be more or less the goal, is to kind of double bottom. So instead of thinking it goes like that far down, that's like super far, man. I know that's like ridiculously far. It could be a situation of just backing up. We probably have another creek as well that I'm not using, which is right in here. And this one, long term, is going to be pretty important. Right here. And it should be on this support, like there. So it's possible that whatever is going to happen, we're already in like a distribution mode come February. Like it will have topped before then. It wouldn't have been like just doing nothing. Like all of a sudden rug pull probably would have topped before then. Or around that point it's going to hit the peak and then distribute. I think that at that particular point, making the argument comes back down to 460 or 450 will be dependent entirely on like it has to be dependent entirely on like a number of things. But the idea of it being like a multi-year cycle actually makes sense. We started it in April going into May of 2024. So by 2026, April, May, you're back here. And again, while this might seem a little bit bearish, it does kind of work with the overall picture of what's been going on. And I think you could look at this as like another widening top with the potential, yeah, to capitulate, but probably ends up propelling it quite high. That's extremely violent, but it would propel it probably up to new all-time highs in the years following. It would take time. Maybe by 2028. Curious. Yeah, Apple's been weird. I haven't really watched it too much. This makes sense though. If you're trying to get low, I know it may not seem reasonable, just that's a huge drop, but it does make sense to me if you're trying to get back to retest the 450 to 500 area again. You probably would come back over the top and redistribute. And you'd have to use some kind of a news cycle to do it. So these would be considered weaknesses, and then you'd have some kind of a massive drop later. I don't know what could possibly cause that. But in any case, what this would look like for AMC would be similar, because at this point, this is the motion up right now, and then you'd have that drop. But while that's happening, that's the same place that we see AMC doing that drop. I think we already covered this pretty thoroughly. But it's a similar spot of right here. Consolidation and continuation right there. And AMC doesn't continue with it. It goes down, it keeps going down. And by this point, it's making new lows. So it follows. Then it makes new lows, and then it comes back up in September and August. So there could be a lot more sideways, perhaps. I'm making it quite, I'm really not sure about that, where that S-curve is. Honestly, this may not advance at all here during this time period. I'm making it like definitely advance, but we don't know for a fact it's going to do that. There could be a more of a sideways motion here on this top, as opposed to like going straight up. It really makes no difference to me. I'm just suggesting that because I don't know. That could be a build out again that shakes out bears and then advances. It may just be like, I guess what I'm trying to say is that the idea of it coming up consistently there isn't really warranted. I feel like you could probably make a better argument that this is where it develops like a sideways range going into 2026, like February, right? Or thereabouts. That's where it's going to break down. So you would have like a really big double flush here, boom, boom. And that signifies a middle around 600. Yeah, that actually makes a lot of sense to me. Good. Well, then we have a path. There you go. That's it, right, Booksy? Well, I'm wondering now if that July 11th is the pivot where it just kind of shocks the market, and then we continue upward in order to sell down again. It seems kind of backwards from last time, but yeah, perhaps. That looks right to me. I've seen that before. So it hits low at like 560 and then it flies to new all-time highs. Then it backs up and it consolidates off the top of 600 for a while into September. That's where AMC plays catch up and then does its thing. So here, if we're looking at the comparison, this jives pretty well. So in the comparison, AMC is already going down low, and then right around September 6th or thereabouts, it takes off. So the market that's going low has this big squeeze moment probably in August, September, and then it consolidates. And again, I'm guessing, and I'm not positive about this part, but I wonder, we have like a January kind of move. I don't know. We'd have to get there one step at a time. We're not there yet. But I could see it having like a similar effect, is what I'm trying to say. Get to its all-time high first and be ready to break down around the same time that SPY's at its all-time high. Similar time frames. Let's measure that out really quick. Yeah. So from the bottom to February or January 2026, okay, February 2026, pick one of those dates. From the bottom here, the middle is September 2nd. That waveform that was ending in February was just such an important waveform. Like it was super significant. So I'm happy that we got that when we did, but this is even more concrete for me now. I'm like, yep, definitely could see why that would make sense. This has got to make a backup through 577. I might be tempted to play the S&P 500 going into 2026. I have to check on this later. That's a pretty strongly evidenced move. This is also now contributing to that because we're about to do that same thing, potentially. This is going to be crazy. This is going to be a crazy, crazy, crazy couple of weeks here. Leading into February or to July. We're in this motion right here. I hope this doesn't take too long. This is a very slow motion move. What could that be? It's got to be the China talk. Like, I can't think of anything else. Earnings and China talk. Is there anything else that I can do short term here to help? I'm trying to remember if there's anything else, like timing wise. No, not really. I don't think there was any kind of special timing with this in the bottom. Well, the low. That's pretty close to halfway. And then if you go from halfway to the bottom, that's like the breakdown. These are great as divisors of waves, but they don't tell you where the peak is. Well, certainly that's accurate as a wave goes, but it doesn't really tell you where the peak of it is. Well, unless you know where the drop is supposed to be, or the pop. That's pretty similar right there. Top, bottom, bottom, top, bottom, bottom. So if we knew that that was the 11th, we might be able to determine it. Maybe. Get close to it. I think I'm going to try it, but I feel like this is going to be a bit of a mess. It's already a mess. Gosh, this is going to be long-winded, isn't it? Got to trust yourself, Booksy. July 31st and August 1st. I think we were right, folks. So this probably hits a low on August 1st. One way or another. Which means these are not as likely. Or they're less likely. So then what? Well, then we have a middle here. Again, this doesn't really help too much. The middle here actually makes a better case for now being a drop. It's right there. It's on June 3rd. So it's more similar to the move already being done. Since this happened before the middle, hey, why don't you get your shoes and go clear off that trampoline, okay? There's tree limbs all over it. Get some bug spray on. Should be right there.
Okay.
I asked you to do that a week ago anyways.
I know.
I know. Jeez. Like a little teenager. He's only like 10. Sassy. I'm gonna go help him out in a minute. All right. Well, I mean, it's not ideal, but this kind of makes a stronger case that we may already be finished with the top. I mean, this is kind of right in the middle is where it breaks down. It does come up again, but it doesn't. So this isn't really beneficial if you were hoping for another big move. It just is what it is. It's just another measurement tool. And it's kind of in between these two right here, so I don't know. Why did I do what I did? Hang on. I'm confused. I'm really just looking at wavelengths. I'm not trying to like say the fractals have to be the same. They're probably going to look kind of similar because that's just a breakdown on a trend. So surely it might look similar, but oh yeah, bottom to that date. That's right. I was trying to figure out what I was doing. It's more about the wavelength than it is about the fractal, if that makes sense. So just measure of timing. If the idea is that this is a big picture wave, it's likely it's going to be similar. An S-curve would make sense here. That the S-curve would end off this middle does make sense to me. So that's the cross down. And that's on August 1st. So that makes sense. But then there's a problem of like, how do you find the next middle? So what I was trying to do was determine where that is. And it's a bit tricky, but this is sort of what I did as I went from middle to bottom again. And it looks like, I don't know, it looks wrong. It does look like that it represents a pretty accurate picture if you just were looking at it on, that's weirdly correct on the on balance volume. All that really tells me is that this is like splitting the difference and there could be another push right here. So I will say this, even though that may not give us the answer that we want to have, and it could indicate that, yeah, it's not going to make another high, what it does do is it kind of confirms what we probably were guessing anyways, which is this is a center mark on either an S-curve or a markup, which is great, and that's important. And it matters for a number of reasons. But one would be quite simple, which is just timing out where the next pop might be in the last real attempt. And it is going to be the 10th. So there's two possible dates. One's the 10th, one's the 11th, but it's right there. There's nothing else. So this is it. So we were right. Because we're shrinking this down and saying if that's the wave from bottom to top, it's very slow. It's kind of an odd one. But you'd be suggesting that this is where you're going to end up, wherever the low is. You know, who cares at this point? But you'd end up coming back down. So this would be a wave to the upside. And the middle would be on the 3rd. It could be slightly before then. Could be slightly after then, because it just depends on where you measure this from. You could measure it from the bottom. You could measure it from the creek cross. But it's close enough that it's pretty much right on the middle here on the 4th. So I'm going to use the 4th right there. And that seems like the most likely candidate for the center of the structure, which means, I mean, August 1st was a date I came up with a long time ago when we first looked at the possible patterns. And I said I didn't think it was going to run in June. I thought it was going to run in August. I don't know if I was first to say that or if I was the only one to say it, but I definitely said it a long time ago. So this is the main motion right here down. And it's probable, yeah, it's probable that it's using this as a, definitely looks like it. It's using it as a kind of resistance. This is starting to make a lot of sense to me now. visually speaking. This doesn't make much sense then, unless it's going to play massive catch-up. So this is sort of the last chance it has to like really push itself to the top. So I had gotten rid of this marker thinking it couldn't possibly do that. But why wonder, guys? I might be wrong about this in that this may actually have some kind of crazy push left in it right here. I had just moved it over assuming that there's no way it's going to hit that marker. That's way too fast. But in fact, it may be the only place it could hit that marker. You know? Like it may need to be like that fast, like a day or so of just rapid upside if it's going to go there. This is starting to feel less and less likely, but I have to just kind of do it. It seems really unlikely, but it is where it is. Yeah, I don't know how that's possible. So wait a minute. Peak to peak. I guess I would have used that anyways. I probably would have used the creek cross anyways, but normally that's what I do, but now I'm like, oh. Yeah, there it is. That's the one. But I don't think that's the breakdown target. I think that's I think that is the breakdown target. I don't think that's necessarily when it gets to the low. So it's like a pivot point. It's the same problems, right? But it would be like that's where it would go up and hook right here. This is going to be wild. It's going to be a really volatile week come Wednesday, I think. Yeah. This kid, he didn't even do what I asked him to do. So it's like this move. This happened in like 2 hours. I think this is what's going to happen. Is you're going to have like a massive multi-hour move here, like a gap up on Wednesday and then a second move, kind of like this. And I don't know how high it's going to go, but it'd be like right there. If it hits that 461, that's when it's got to do it. It's super fast. That's like by 1 o'clock on Wednesday. If it goes down low, it's the same place it's going to hit the hook. So be mindful of that. Like it's going to be the same intersection as like the 361 right here. I think that's intentional though. So it's going to be kind of ugly. If you were really trying to just be careful about it, you probably wouldn't want to trade. I don't know what you would do, but you probably wouldn't want to trade the highest you could trade. You'd want to get out here. I'm going to say that it ends Wednesday by after lunch or right after lunch. I'm just going to say that because I think that's pretty likely. Now, it's already broken down out of this trend. So in theory, one might say that it seems more likely it's going to hook. And that's where I'm sort of left with the contrarian play. And I've already talked about this. Like the bears have control right now. There's nothing to be done about it. It is what it is. Right now, bears have control. But if it pushes above 362 and holds that, it's probably going to rocket, I think. If it happens that day, it's going to rocket all the way up. So we're likely going to see that 461 if that happens. And if not, this should be looked at as a double ear either way. 1, middle, 2. So the rest of this has to then be taken into consideration. And things get kind of dicey there. Because it could not be that high by that point. It's not possible. I think it would have to be below. It'd have to be below this point here. 350, then through it, and then 350. Yeah, it'd be pretty rapid fire. Whatever. We would get there when we get there. At some point, this kind of assumes the same motion, but if it's going to go down into August, and it's one of those questions of like, how low does it go too? Because in this higher scenario, at first I thought, well, that probably means it goes lower, but now I'm kind of wondering if that's not the case. If this kind of props it up in order that it doesn't go lower, which has, again, a question of liquidity. It's like, I don't know the answer. I don't have the answer to that. I'd have to already have the end in mind to do the measurement correctly, but we know that it just barely needs to drop beneath 230s. So they're 238. So as much as we might suggest, yeah, it's going to come to 190 or $2, like from a spring standpoint, that's not necessary. That's just the estimation. Really, it could hit the low point on August 1st at, 236, which would be the level that Booksy said would be really funny if it hit, because that was the conversion of the $1 marker or whatever. But yeah, I mean, if it did that and then it came back up by, September, 2 to 3 weeks, I think you could have a build out probably by the 22nd or 25th back above 238, and then and just take off, go to the moon, so to speak, right? It makes sense, because this would be like a backup, and then you'd have 238 hit, and then you'd come up again. Do that. That would be your accumulation right there. And then pump would begin, and then you'd rock it. And it probably wouldn't go as high, like we were saying, because of the way this is set up. It's a bit strange. I don't want to get into the big picture again, but unfortunately, it was starting to look more and more like it may only hit like $9 or something at first, because of the way this is set up. I'm worried it doesn't actually go over the top anymore. And I changed my mind about it. If you missed it, I'm sorry. It has to do with where the reaccumulation is, and I'm starting to think that they just go to 9 and then it builds out above 560s. So it depends on where this goes, because if this goes to 461, this will come back to near 461, which works quite well right here. If it goes to 4, this could come really far down, right? But that would be the place it would most likely hit, and then you'd have a like a reaccumulation phase like before. But it wouldn't reaccumulate above way high up. It'd reaccumulate from like 7. And this has to do with the fact that this is all at an angle. So it's like curving this way instead of curving straight. It will reaccumulate from 750 to like 550. That area. And then by February, it would go again. And unfortunately, that's where we get into the place that people don't want to get into, because that's where we talk about, yeah, well, if that happens, then we could be in a, I don't know how quickly that's going to happen. I guess it could be the same speed as here. It took that long. Something like that. Wouldn't take very long. Yeah, some kind of Christmassy run. The market's already up there, and then this starts running up like a January or February kind of thing. And this is where things get kind of dicey. But we talked about how it may not come above 20. So it's not cool, but it is what it is. I mean, it's not gonna be the popular opinion. I'll tell you that. It's not gonna win me any friends, right? I wouldn't even be surprised if this lasted until March or April. Honestly, based on the way this thing sets up. That's super low, but it is reasonable. Yeah, I think we're gonna see this. So crappy. But I think it's gonna come back down again. This lines up quite neatly though with the what we just talked about on SPY. So yeah, it's kind of bonkers. I know it sucks. If you guys are looking at this like, wait a minute, what? First it wasn't going to go there, then it wasn't going to go there, now it's not going to go here. I know. But we did a macro analysis on it a few weeks ago or a couple weeks ago, and there's a lot of issues with what happened here in the chart shift and all that. And if you look at the chart shifting, it does make sense. Without it, it looks ridiculous because it looks like it doesn't come very high. Honestly, it just looks like it comes back up here and redistributes right over the top. And that's not completely wrong. There's an element of that that's true, but it has to do with I mean, this could come up that high. Who cares? It could come up pretty high. But it has to do with more so with the shifting of the chart than anything else. So, because the same moves here that we're talking about are actually producing the correct moves. Oh man, if it's 236, guys, I don't know. Who cares, right? But it's like, I would care. I'd be like, what? That's crazy. Yeah. It's about this gap fill, and this gap fill is met with the shifting, with the same move. And ultimately, like, that was shifted down here, and that's as far as you really have to go on that wave. So even though I was more optimistic about it previously, I would have to concede that that's entirely possible. Because the reality is quite that it's really that simple. In some ways, is that you do not have to exceed that drop down. It's sort of the lowest point of contact. So the idea of this being like a waveform, it is there. There's a lot of elements to it that are there, and I think that we should consider it true. But again, the idea of this going out into like even May or April, it's like, well, that kind of works. If you think about this as like a pump up here into January, and then it builds back out and then breaks down, it works. I know. If you're like me, you're probably thinking that's not really what I wanted to have happen. And I would say, yeah, I know. But unfortunately, it's probably correct. I'm personally just glad that I kind of like taking time to like look through this stuff. You don't want there to be an answer that you don't like. Like, of course, you want the easy answer to be the right answer, the one where it gives you the most return, that gives you your averages back and does all this other stuff. I know, I'm with you, and I wanted it to be higher too. But that's the shift move right here. And the accumulation makes way more sense here than it does above here. It just doesn't make sense. So the original was based on it pushing above the top, but that's not the way it's set up. And the more I studied it, the more I was convinced that that's not true. So the opportunity is still there to make a huge amount of money, but you have to be patient and willing to say, like, I don't necessarily think it goes above 20, you know. Yikes. This follows, is what I'm trying to say, though, with the big macro picture. It does. And with, frankly, what GME might be doing during this time. It makes a lot more sense of like this potential long-term build out as well, in that it does the same thing. Because really what we're saying is that this is generating like a long-term creek jump, right? If you think about it that way, and you're thinking about how like, well, this is generating this kind of creek jump right here, and a backup and another big creek jump, and it actually makes perfect sense because it's the same exact M cross. It's just happening like really low, not low, but yeah, but low. Because this is like an M cross right here, and then it pushes up and out and goes above the top. But GME's verticality is there, whereas AMC's is not. So this could present a really good picture for GME short term going into, you know, potential top in this zone near these all-time highs, and then coming back low, but never really breaking down. And then eventually, we'll get to this on AMC too, eventually getting up to the potential of 2029 or 2027, late 2027, 2029, having potential for massive, massive upside. I think the same is true here because you have the potential for a phase B bottom. I just don't know if it's going to go into a spring or not. And there's a danger, of course, that, yeah, eventually by 2027, this could be at a new low. It's possible. Then I think it's probable that this comes back up. And we're not there yet. This is a long ways off. But if something like this were to happen, it's going to happen within reason. There'll be some kind of markers that are checked and hit and all that jazz. So there'll be like something like this or something. And then it'll break out here. And probably do some kind of a bigger move. Way up top to like 50s. And at that point, if you're 2029, I think if if AMC's fixed its problems, is out of debt, then I think it sort of resumes like a more regular trading pattern between maybe like a $40 range and a $12 range. We'd be out of the noise, and it can do something completely new. But not without reason, you know. This gives me a bigger picture that, anyways, to me makes more sense of like a long-term kind of build out and walk out here. We're not there yet, so let's not fret about it. And actually, I know this sounds weird, but if this did do this, I might be thinking that this is like a widening at that point. And I would also consider that, yeah, I mean, that seems about right. And then I would also consider this a potential like large cup and handle. So if it did do that and it managed to make itself ready to go, I think you could come back up and reach back to maybe not all-time highs, but you get pretty close. Probably this level right here, this drop down. This is going to be the big one. I'd have to check and see where the, I wonder. Yeah, don't think it's happened yet. But we need to check and see where that creek cross is right here. It's like right in the middle. I wonder if there's an E. What I was thinking is like, normally I'd measure from the center of the jump, which looks like it would be right here in August, which is the correct spot. That is where it should jump up and over, right there. So it's in the right spot. This is a hot mess, Booksy. This chart, I know, it's getting worse. But it is in the right spot because that's where that jump would be. Right there. For something. Yeah, 460 looks good. And then it consolidates, breaks out again, goes up to the next wave. And then it dies probably before everybody wants it to die. And then goes into a downward motion, kind of a long-term repetition of the same thing. Yada, yada, yada. Sort of works. AMC has a lot to prove, but future tense, that gives it a pretty decent chance of coming back up. So I bet this also works in its favor this way. Like that. Where that gap is. All right. Well, you're welcome to think whatever you want to think. I'm not going to tell you what to think. I do not think it's going to go up. I don't see any reason, like, I know that I've talked about fundamentals a lot, and like sometimes we don't really care about fundamentals. But the problem is that from a technical standpoint, I also can't see a really good reason. This makes sense to me if this is a creek cross, that it would bounce and then come back down again. That it would go way above it and then come back, just like this did. And it's a consolidated effort. And I just found that there's nothing here from a technical standpoint. I'm just going to tell you right now, like, if you do a proportional comparison to the same waves and the directional inputs that those waves had, there's no massive push here. It's gone. It needed to push higher. I would say if you wanted that to have happened, we would have needed to see that evidence back in November and December. All of the trajectories are pointing towards this pocket around 20. It changed. There were some high trajectories early on, but they're gone. They don't exist. It's not that they're gone forever. It's just that they're not, saying they don't exist is dumb. I shouldn't have said that. What I meant is that they do not have the gravitas because there was no reconnection to them. So when we came back up in November, it was really important to kind of hit the right note. We did not. We went to the lowest possible push, and then all the other trajectories are low. There's no trajectory specifically like this guy right here. There's just no trajectory that's pointing higher than this particular level. Like, you can fudge it all you want and try to make it look like a certain way, but I did the numbers according to what was there, and it's just not strong. It lines up very neatly if you use the chart shift. It's extremely nice. Another thing that also doesn't work is, unfortunately, I would say it was an assumption on my part. It was kind of an assumption that there was going to be a perfect 2-year cycle that's sideways, but none of the evidence points to that anymore. All of it points to directionally, again, if you use the proportional figures, and we've already done this, I don't want it to be like a negative experience, obviously, for anybody, but it all proportionally kind of points to this being an actual downward motion, not an upward motion like it was in 2020, not in the same way. Now, I will be very happy if I have something like $20 strikes and it runs the $20 in one fell swoop. Hey, what you got?
Is it your figure?
No.
I got a bug.
What kind of bug?
I don't know.
That's cool looking. That looks like a horned beetle.
Yeah.
Is that a horn?
Yeah, it's a horn.
Wow. That's a big horn. How did you catch it?
Well, I found it in the pool swimming.
Oh, so you rescued it.
Well, yeah.
Or you was taking a bath.
I don't know.
Yeah.
Anyway, I need to know what they eat.
I have no idea what that is, so we'll have to like Google search it. But it looks like a horned beetle.
It is a horned beetle.
I think there's like a couple different kinds in the area, so we'll try to look it up.
Right now, because he's hungry.
I don't know what they eat. Anyways, so I don't really want to throw water on anybody's parade, but I tend to be pretty close to accurate with my targets. And at the end of the day, I got to just kind of trust my own TA about it. And I think you guys got to do the same. So if your technical analysis thinks that it goes higher, then what can I say, you know? A lot of it's going to depend on this first move. If this first move does not come above the previous top, then it's very likely that we're looking at an actual downward trajectory here, like I was saying. And that this is an extension above it, but it needs to cross back over. And then that really gives you like a 50% anchor anyways. You can just 50-50 it up from wherever that jump is. And I think that jump's going to be right there at like 650. So that's where I stand on it. Okay. All right, guys. Tomorrow and the next day should be pretty exciting. Today's kind of meh. SPY's above 600, which is cool, but a lot of stuff's kind of choppy and weird. Yeah, I don't know what Apple's doing at all. It's going both ways. Like you said, it looks like neither of my scenarios, so that's always fun. But, you know, I had a gap. Gap's filled. We'll see what happens. It did make a higher push, so I don't know. It looks a little sloppy. Almost like it's trying to cross a creek, but it's not making it. AMD's up. Starbucks was up this morning, too. A lot of my tickers are looking pretty good. Some of them don't look that great. Fang's up quite a bit. It's kind of mixed bag here. Starbucks is like way up here at 90. I had 95 strikes, so I may start getting out soon. AMD's up. I don't know. We got a couple more days. I think we're going to get some more upside, so we got to be patient. Oh, okay. I barely ever drink Starbucks even, you know? It's too expensive for me, but I like their Americano. It's okay. But it's not like the best coffee in the world. I don't know. But they had a really good technical setup here, so, and you can see they're coming back above pretty historic, important levels. This one's pretty important right here. Long term. Yeah, I mean, it's in a place where it could see some really good upside. I think to like $99 or something. Like I've shown this before, but we'll see. At this point, I wonder if it's just going to make a pop and then drop far. Like go ahead and pop up to like near 95. Like tomorrow and the next day. Oh no. Wednesday's the day to watch. I gotta go. I really do appreciate you guys hanging out. Sorry I didn't get to more stuff. Typical rambling booksy day, but I don't know, man. I got a lot going on. I just feel weirdly overwhelmed, even though I feel like the market's actually been my least concern right now. So I got some other things going on that I'm trying to figure out. Yeah, this wolf thing is doing that as well, isn't it? It is. Yep, look at that. Same thing. Is it? No, it really is. Wolf is the same. See that? See how it's created like an M and then it's doing the exact same thing right here. It's like the same exact setup. Look at the build out. That cross up. It's noontime on Wednesday. It's got one more chance to jump that creek. If it doesn't jump it, it's going to dump like off the face of the earth. This is your M setup. It's got to do one more right here. Well, this is it, folks. We will see you on Wednesday if I don't see you tomorrow. And I think Tuesday, Wednesday are going to be the big days. So I'm planning on streaming a lot more. But today I just want to do like a quick few hours and be done with it. So since I got my kiddo home for vacation and he's playing with bugs, I got to help him out, I guess. Anyways,